don't question momentum. And I learned this in 2003, 2007, when the entire bull market was fueled by foreign liquidity. Obviously, everybody seems to be talking about the Fed rate cut that has happened. I think more than refueling the economy, it's actually refueling the markets, because I think a lot of the positives were already in the price, and we wanted some new development which the market can latch on to, to move significantly higher. And I think with this development, it does seem as if a new momentum on the upside is building up. Any which way, I think the last 2.5 weeks have been extremely quiet. Honestly, the trade has not been in the Nifty or the major large caps. They've all been languishing. But if the index were to get past 25,600 on a closing basis, which I think is a very important resistance, I think that will open up another 3 to 5% on the upside. And I still feel that this is a stock-specific, theme-specific, sector-specific market. There is still a lot of money to be made. India VIX is very quiet. There is no real euphoria. I think with what has happened in the last 7 to 10 days, people are questioning this move a lot more than enjoying it. So I think keeping all of those factors in mind and looking at the charts, and with the comeback of the Bank Nifty clearly, and with global markets doing well, all of these factors put together talk about further upside, but not really in the index, maybe outside of the index.
Gautam, that's such an interesting point, because yes, you are right. The most common verdict is that bahut ho gaya, it's too overvalued, let's get out of it. So I'm glad you're mentioning this. My question is, Gautam, if you indeed believe that the markets, and by markets I don't mean just the Nifty levels, but overall, if let's say the Nifty 500 is to stay stable or move higher, I heard you say the moves could happen outside of the index. Where are those pockets where you believe that people can still make money on the upside? Conversely, do tell us also, where is it that you also believe ke bahut ho gaya?
Well, I personally feel that, first of all, on the Nifty, you can't talk about lofty targets, even for the Bank Nifty for that matter. In fact, Bank Nifty has really become a value stock in some sense. I mean, if you look at the valuation and the P ratios of the Bank Nifty and compare it with some of the large cap private names and the PSU names, I think it's value. It's really offers great value. And that's probably the reason we've seen this comeback in the last 2 weeks. And with the Fed cut announcement, I just believe that this entire financial services space could do exceedingly well over the next 3 to 6 months. So housing finance companies, insurance companies, NBFCs, banks, I think that's really the big margin of safety trade that we have at this point of time. Some other pockets, that we continue to like would be pharma and IT. I know IT had a down day yesterday, but overall, structurally, we remain very, very bullish. And the two other spaces which I see are potential big winners over the next 3 to 6 months. First would be metals. I think we've seen an excellent comeback in the last 5 to 7 days. And with what's happened yesterday in the US, I just feel that the metals index is ready for a breakout past 9,600. Once that confirmation happens, we are looking at a 1,000-point move on the metals index. And chemicals, very quietly over the last 6 weeks, we've seen a nice rebound in all the top stocks. Look at the Deepak Nitrate, look at the Tirumalai Chemicals. Many of these names have done very well. So that's again a pocket that we like. And not to forget FMCG. ITC is quietly sustaining above 500, Godrej Consumer, Hindustan Unilever. So these are the pockets that we like. In the mid-cap space, you have to be very, very selective. Auto ancillary, paints as a space, selective infrastructure stocks, sugar, fertilizer. So these are some of the pockets that we like in the mid-cap, small-cap space.
So a lot of calls there, Gautam. Fantastic detail. Hi, Tamanna here, and as always, a pleasure to speak with you. Just, I want to come back to a little more minutiae when it comes to the BFSI space. Are you liking NBFCs? Are you liking a Shriram, a Bajaj Finance? What about your private and public banks? Anything there that you're finding very, very attractive right now?
Well, I think we made this point a couple of months back that Bajaj Finance could potentially be the trade of the next 1 year. And I think if you look at it based on valuations, based on fundamentals, based on visibility, and based on the charts, I just believe at levels of 75, 76, 7,700, you can't go wrong. And I think it's one stock, that could deliver super normal returns over the next 1.5 years. And not just Bajaj Finance, I think the entire NBFC space, we make a custom NBFC index at Goldilocks. That seems to have, confirmed a breakout in the last 1 week. And it's doing much better than the actual Bank Nifty. So I think NBFCs as a pocket, and with yesterday's Fed announcement, it only fuels the rally even more. And I think with RBI likely to follow suit, whenever over the next few weeks to few months, I think NBFC is a space to be in.
Gautam, you mentioned that you like metals. I was telling Neeraj this morning that LME inventory is at a record low as we see it. In metals, if you've got to play proxy to commodities, give me 2 or 3 metal stocks you would initiate fresh longs on at current prices. And the fact that money is limited, I wish we could go out and buy chemicals, banks, metals, all of it, right? But that one top stock or sector that you would bet the house on right now.
Well, in the metal space, I think the point that you make when I speak to people on the street and when I speak to a lot of managements, the commentary is that on the ground, it's not all that good. But then when you look at it on the charts, it's not so bad. I mean, you have JSW Steel at a lifetime high today. And some of the other stocks like a Hindalco or a Vedanta are all close to lifetime highs. And I think the sector has gone through a nice 3.5 months of consolidation, and it's preparing to break out. I think a lot of the current negatives are in the price, and the future positives will now get discounted over the next 4 to 8 weeks. So I think JSW Steel and JSPL for me are the top picks. But if you ask me of one dark horse in the metal space, I think it could be NALCO, National Aluminium, which has an incredible chart, very good fundamentals, extremely good sector tailwinds. I think that could be one of the bigger winners. So if you have to really allocate your capital wisely here, it has to be pharma, FMCG, metals and IT. And I would actually stay away from the past big winners, PSU, auto, capital goods, real estate. I would stay away from these 4 and commit into the other 4 which I mentioned.
Pharma, which is the one stock you're buying, I did hear you say ITC is one you like from the consumption space. In pharma, give me one stock that you would go out and buy right now. So
I think Dr. Reddy's has a very interesting setup. I think Dr. Reddy's, Cipla and Sun Pharma. I would go with these 3.
Sun Pharma, ITC, NALCO. Would that be the 5 top stocks you're recommending?
Yes, I would. And Bajaj Finance, not to forget that.
Yes, and Bajaj Finance.
Just Gautam, before we let you go, since we've seen the 25,600 mark on the Nifty, and we started this conversation with a Nifty call from you, do you want to return to it?
Well, I think Nifty is not important anymore. Honestly, we keep talking about these numbers, but if we do get past 25,600, I think the next real stop on the upside is about 26,500. But that's 4% away from where we are right now. I think that as late Rakesh ji used to always say that the trajectory is more important than the magnitude. And bull markets always top out on greed. And where is greed? I see concern, I see fear, I see questions being raised in today's bull market, and bull markets don't top out like this.
Gautam, we have a global guest waiting, but I'm tempted to ask you a 30-second answer if you can. Gold, you've been a big bull. You continue to be a bull on gold?
Absolutely. I think it will do the unthinkable even from current levels. And I think after what has happened last night, I do believe that gold is now ready for $3,000 gradually. And silver could potentially see a 30% rally even from these levels. And I maintain my view that gold and silver will beat equity benchmark returns over the next 6 to 12 months.
Quite a statement. So gold and silver might bleed equity benchmark returns. Gautam, we constrained for time today.
They already have, over the long term as well.
But bleed is, well, quite the statement, really. But Gautam, thank you. Very soon, Gautam, we should try and, ahead of the festive season, do a longer chat. Today, constrained for time, we'll have to thank you here, but thank you for taking the time out.
Thank you, Neeraj. Pleasure.
That's the view from Gautam Shah of Goldilocks. Enjoy the moment instead of complaining about the upticks. That's the view from Gautam Shah. Let's ask Harold van der Linden, a very important global voice. He's head of Asia Equity Strategy at HSBC. Joins us on this all-important day. Harold, great having you. Thanks for joining in. Do you reckon risk asset investors will have a chance to enjoy moments in the next 1 to 3 months post this Fed rate decision? Is this easing cycle going to be accompanied by upticks?
I think for the moment, yes. What you normally see is that the market has anticipated these rate cuts. And after the rate cuts, normally you have a couple of months of good performance as well. So if you say over the next 3 months, will risk assets do good? I suspect the answer is going to be yes. If you then go a little bit beyond that, say 6 to 12 months, then very often what we see is that markets are starting to come off because the very reason for the rate cuts is that things are slowing. And what we've seen in the past, doesn't have to happen this time around, but what we've seen in the past, that markets after 6, 7 or 8 months after the initial rate cuts start to drift lower again because worries about growth starting to come through. And so we'll have to see over time if that's going to happen again this time. But for the next 3 months, I think this is positive for risk assets.
Harold, good morning. Great to speak with you. Just to get a sense of what is the view now on emerging markets like India. From the Indian perspective, the rate cut paradigm shift becomes very, very important to understand where global flows are going. What would be the view?
Yeah, so the view is that these rate cuts will be positive for emerging market assets. And we like risk. Emerging markets is more risky than developed markets, so that's good. And what you're going to see is that because it doesn't make as much sense now to keep money in money market deposits anymore in the US, you want to put money somewhere else, and equities and Asian equities will fit into that as well. In addition to that, what we also see is that appetite for the Japanese market is cooling. So you see that money is coming out of Japan. That doesn't have to go into Asia, could be going somewhere else as well, but that's something to keep in mind as well. So there are two sort of dynamics that is good for Asian markets. And then the question is, of course, will they go to India? Now, the funny thing is that for global fund managers, they're underweight on India. That's got nothing to do with their view on India that has been negative or so. On the contrary, most of them are positive. It's just that they feel uncomfortable with the high valuations, and the local investors have bought up that market, right? So they've pushed the foreign investors out. So the question is, will they come back?
Sorry, just the point on India, if I can just ask a quick follow-up. If not India, then where else? I understand the valuations are uncomfortable, but for global money seeking a destination, what then is the alternative?
Yeah, that's the real problem here. You're absolutely right, because let's go around the region. Japan, we see the yen strengthening is not good for equities. In Taiwan and to a lesser extent in Korea, the AI rally seems to fizzle out. So then you got, of course, India. China, the problem with China, of course, remains growth. And the appetite for China is not extremely high. So real good news got to come out of China in order to absorb that money. And that news is not there yet at this particular point in time. And then actually the other great story in the region is ASEAN, but ASEAN is small. So if we take that out of the equation, because it can't absorb the money that an India can, you're right, where else can it go? And that is the problem. That's, excuse me, that's exactly what you see in markets, that people struggle to buy more India because it's too expensive, but they are actually almost neutral in China because if you don't have much more in India, where else do you put that money? So you end up being neutral in China. That's right.
Harold, hi, it's also Samina joining in. And if you're buying India, and I know you've said this before, that India is where China was maybe 20 years ago. So the road ahead is looking very glorious for us. And everything seems to be coming together. You do like banks, from what I remember last. You also did say that while the balance sheets were strong, things could be slowing down. At the current juncture, with a rate cut in the US, an anticipated rate cut in India, which could help balance sheets for Indian banks, would you buy Indian banking names?
The short answer is yes. But I do see cracks starting to appear in the Indian story. We know the Indian story is great, GDP growth is great, and there's a lot of sort of formal retail takes market share for informal retail. I do see the first cracks to the Indian story appearing, but it's not something that is going to keep me awake at night, and also doesn't mean that I think that this is the time to exit that market or so. On the contrary. And those cracks appear in the banking system, to be honest, because you see that they struggle to keep the deposit because everybody's putting it in the stock market these days. So there's pressure on margins starting to come up, and delinquencies in some of the personal loans is picking up as well. But broadly speaking, you want to have banks or companies in general in India that have distribution capabilities. If there's one thing where India is unique as against China, you're right, a lot of things look like China 20 years ago, but where India is unique, you need to be able to distribute in India. That is one of the most difficult things to do. And banks and retailers and these sort of companies, they can. You get good distribution to a large part of the population that is growing and willing to spend more money on a mortgage or a car loan or maybe on cosmetics or something like that, then you're in a really good position in India.
Harold, would you tell investors sitting outside, including yourself, to add incremental capital to Indian markets right now? Or will you wait for a better time and opportunity, because the fear of missing out is also quite real for these markets?
Yeah. So basically what we tell people when it comes to India, you have to ignore the valuation for the moment. It is just, it is expensive, but the underlying momentum is good. And as you or your colleague just highlighted, what are the alternatives in the region? Where else do you really want to go? Yeah, Indonesia looks interesting. The Philippines look interesting. Those are smaller markets. Taiwan is struggling with AI. So that's a problem as well. So Korea is where people like to go. China is where some of them go, but it's really concentrated in a few stocks. And in India, you got a broader sectors, a broader selection of stocks where you can go to. It is expensive. We just have to digest that for the moment.
Harold, the question then therefore comes is how expensive can expensive become? Because some people argue that Nikkei, when it topped back in the last century, topped at 60 times multiples. We are still at 22 times.
Yeah, that's right. I think you've got to be careful what you wish for, because it sounds great if you can go to 60, but remember that the Nikkei then fell for 25 years thereafter. So then you got 25 years of bad market performance, right? Listen, I think if you trade as a market on 20 times, but you can deliver also about 20% earnings growth, and this year and next year, and maybe the year thereafter, as long as that visibility is there, I'm happy with those higher valuations. If we see that visibility starts to disappear, or earnings disappointments come through, or we see that banks or certain consumer companies start to struggle with their businesses for whatever reason that may be, or we see other excesses in the market of people taking on way too much loans to put it into the stock market, which is something you got to be always really careful to do so, then I think you're getting to a situation whereby, hey, we got to be really careful here. That's exactly what happened in Japan. In 1987, 88, 89, the market was boom, 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 going up like in India. But eventually, when it started to come down, a lot of things started to work in a negative reaction, right? People had used stock as a way to borrow some more money, and if the stock goes down, well, then you have to repay your money suddenly. So you got to sell even more stock to repay that money, and then the negative, the dynamics move into an opposite direction. Now, we're not there yet in India, and I hope we don't really get there. What you want is good growth, steady growth, visible growth, and a steady pickup in these markets.
By no means was I wishing for that 60 times, just making a point, trying to get a view.
I get your point.
Harold, we keep talking about this and we keep worrying about how China is doing, and the fact remains that metals are reeling under pressure. No matter what happens to the dollar, and you may see that weaker currency, positive commodities, all that play out, fact remains demand on ground is a huge problem. Do you not worry that this will play catch up?
That is a problem. We know it's a problem, and that's one of the reasons why demand for certain particular materials continues to be weak. China has got a growth issue, and that comes from the real estate market. The funny thing is, in China, in Hong Kong and Singapore, just to give you an idea, and in China, onshore China is the same, but in Hong Kong and Singapore itself is almost 2 trillion, and that's with a T, trillion US dollars. Stand on the side. People hold it because they do not feel they can invest yet in China. The amount of money onshore in China that is held in deposits, where they cut a deposit rate in China gives you maybe 2.5% these days or something like that. But they keep enormous amounts of cash on there because they feel uncomfortable investing. It's exactly the opposite of what's happening in India at the moment. We need to see a catalyst for that money to be employed.
Okay.
I don't know what that catalyst could be, but there's a couple of things that could help. But at the moment, that's just clearly not the case.
Okay. Harold, just one final question. And this is about whenever you have good news, euphoria, excitement, we're definitely seeing that in Indian markets right now and globally as well. Then come those who are saying that there's going to be a big downfall. They're pulling out historical data, what happened in 2007. Just wondering if you're looking at any of that historical data at all, and are you buying into this sense of foreboding, or is it that people just don't want to enjoy what they're seeing?
No, I do look at the history a lot. I teach a class about it at a university in Hong Kong. But I think you got to also understand, for us to look at markets, we try to understand history in order to understand how things worked in the past, but it doesn't mean that's going to happen in the future. So we need to look at India equities on its own merits. Is growth good? Yes, it is good. Is it visible for the next 1 or 2 or 3 years? That means, are the underlying trends very easily identifiable and understandable? Yes, it is. Are the valuations excessive? Well, compared to the region, yes, but it's not, as your colleague just mentioned, it's nowhere close to where Japan was. So as long as these fundamentals are in place, this can continue. It's easy to call for a downturn because as long as you call at some point in time, you'll be right. But I think that's the wrong attitude at the moment yet. Yes, there are cracks appearing, but it's not something I would say, hey, it's time to take money out of the market. So far, India looks good.
Okay, so far India looks good. Pleasure speaking with you, Harold van der Lind there. Always an interview with him leaves you with so many quotable quotes at the end of it, and this is no exception. We have to wrap it here though on India Market Open, and we're doing that at a record high, so no complaints there at all. Very quick break, but stay tuned. Up next is Talking Point.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FX.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. It's the day after the Fed rate cut, and the case for a chat amongst all things global that we'll talk about to our guest also is local. What are the sectoral beneficiaries of rate cuts, if any? Because rate cuts in India might have a delayed transmission relative to what's happened in the US. But independent of rate cuts, are banks better placed amongst the valuation concerns that surround a lot of other sectors? And while IT is sulking generally, is IT outperformance around the corner? In fact, in an era of an easing rate cycle, tech tends to come to the forefront. And let's talk about all of this and more with Nilesh Shah of Envision Capital. Nilesh, great having you. Thanks for taking the time out. Really good talking to you today on such an important day. How are you viewing the commentary from the Fed? The fact that they did 50 instead of 25, of course, so that's woven into my question. And the outlook for risk assets, given the fact that we are in an easing cycle, even if it's not predictable, 25 basis points each.
So, Neeraj, at the outset, I clearly believe that this rate cut honestly augurs well for risk assets or riskier assets, or where the volatility could be high. So clearly, I think this is very positive for emerging markets. And within emerging markets, this obviously is even more positive for India, which essentially has been outperforming relatively and outperforming by a very big mile. So to that extent, I think it's very positive. It's positive for riskier assets. It's positive for emerging markets. It's positive for India. Specifically for India, why it's even more positive? Because I think clearly over the last 3 years or in the post-COVID era, FIIs or FPIs have been relatively underweight and have not been able to catch up with the rising weights of India in emerging market indices. So to that extent, it's quite possible that with interest rates coming off, I think they could basically come back and increase their allocations to India. So I think on an aggregate basis, on the whole, this is directionally positive.
Okay. Nilesh, I asked this question to now everybody, right? And it's pertinent because you can think of India as an expensive market in an idiosyncratic fashion, because valuations could be maybe a bit stretched in a lot of cases. A lot of cases maybe not so as well. So if you were not necessarily an India dedicated portfolio management service, Nilesh, would you choose other markets over India, considering that India is growing well, but a lot of others are not, and maybe Japan is, maybe Spain is, but not a lot of other markets are. So would you choose India over other markets or other markets over India? Part one of my question is that. And part two, that if you were choosing India, would it be a low overweight with very specific buckets, or would you continue to stay overweight India because growth will take care of valuations?
Firstly, Neeraj, I would be overweight India. I think the narrative for India, I clearly believe, is strongly more compelling compared to the other opportunities that one has in global equities or emerging market equities. Look at the large pockets. What are the large pockets? It's India, Brazil, China, Russia. Okay, I mean, just these four are the very big pockets. You could add Southeast Asia as the fifth pocket, which is a combination of Malaysia, Indonesia, Philippines, and that basket, and Vietnam maybe. Clearly, India right now offers growth. It offers stability, political stability. And it offers essentially multiple kinds of opportunities. You really don't see some of the other economies having this breadth of opportunities, and a very large extent of policy certainty. These are some of the strong factors which go in favor of India. India is still at a very early stage. I mean, I think some of these other economies, they are already at $10,000 per capita or north of $10,000 per capita. In fact, the biggest risk out there is that will they face, or are they already facing a middle income kind of a crisis where you get to $10,000 and then you basically struggle your way up. India is yet to get there. We are still at about $2,500 or $3,000 per capita. So that gap between $3,000 and $10,000 is still massive. And it's going to take 10, 12 years or maybe around that time to kind of get there. So in that period, which is probably the next decade or so, India basically is well poised to deliver higher growth backed by strong policy response. So I think these are some of the things which go in favor of India. Now, in India, what does one do? I probably think that the two most powerful themes are around digitization and urbanization. These are the two most powerful, most strongest, or most structural opportunities, and therefore one would look out for bottom-up opportunities in these two very powerful themes from an India portfolio or India allocation point of view. And I think it calls for being seriously overweight on India. You could basically kind of differ on timings, whether it is now, or whether it is 3 months later, or maybe 6 months later. But clearly, I think the case for India is getting more and more compelling, and therefore calls for essentially higher allocations to India.
Nilesh, could you exemplify why do you believe these are the two most powerful themes?
So Neeraj, clearly, if we look at urbanization, I mean, we're still at about 35%, 65% still is in rural areas. There is a shift happening from farms to factories, and you're going to see more and more people come and live in some of the towns or the smaller cities or even some of the bigger cities of the country, and a lot of basically villages also improving. So clearly there's a shift towards urbanization. You're seeing nuclearization of families, and you're basically seeing the dependency ratio essentially kind of get better, which means that you now, instead of just having one person in the family earn, you're going to have increasingly two people in the family earn. So what all does this mean? It will mean more consumption, better homes, better appliances, better education, better healthcare, and some of the other kind of areas. So you're going to see all of these opportunities. So clearly for the next 5-10 years, the demand for most of these pockets should be in kind of double digits. So that I clearly believe. So this whole journey from maybe 30-35% to 60-65% is probably going to take 10, 20, 30 years. And you really therefore don't find a comparable opportunity globally. And this is the journey which all other underdeveloped or developing economies have gone through, especially our Asian peers. They've all gone through this whole spate of urbanization. So clearly believe that this is a very, very strong phenomena. The other strong phenomena is basically digitization. We are seeing how digitization is making inroads, especially over the last 10 years. The whole technology adoption, the rise of the millennials, the rise of the Gen Z, and their comfort with using technology to trade, to save, to invest, to bank, to consume, to transact. And that's become a part of living now, or increasingly becoming a part in a significantly bigger way. So clearly, therefore, businesses which are using technology essentially are emerging to be disruptors, challengers, and eventually champions. And this kind of a journey, which individual businesses are going to essentially travel or are going through right now, essentially can be very, very big winners and very big wealth creators. So clearly these two pockets, in my view, are essentially the two most powerful themes and the two most powerful opportunities from an India standpoint. And I clearly believe that these are unparalleled opportunities from a global standpoint.
Nilesh, can I urge you to try and tell us, when you think about I'm presuming, I mean, I'm not saying you're specifying names, but I'm presuming when you're talking about companies using technology, for example, right? The Zomatos, Swiggies, PB Fintechs, etc. of the world come into the picture. Help us, help us understand how you think about it, because again, it's very easy to get caught in the argument that the stocks have rallied 4x, 5x from the recent 1.5 year lows, and therefore they are baking in some of the optimism. So when you are thinking about these themes being multi-year themes, how do you think about it? Do you think about Zomato as to what it will be, say, in 2030? Do you think that far out? And if so, how do you think about these businesses as to what they could be in 2030, and therefore the resultant stock price movements maybe?
Sure, Neeraj. I think that's a very, very pertinent kind of a question, and honestly, it's worth a slightly even a longer debate. But
Sure.
basically, just to kind of summarize that, any of these individual businesses, Neeraj, they are essentially addressing very large underpenetrated kind of markets. They are essentially solving a problem. They're trying to kind of make life easier for consumers and deliver to them a solution in the most efficient and effective way. So I clearly think that's essentially the big premise. And because of this large opportunity and the fact that they have been able to develop a very strong technology stack and have been able to execute very well and have been able to kind of build scale at speed. I think building scale is one thing, but to be able to do it at speed and with excellence, I think is quite phenomenal. The fact that now most of these businesses have become a bit profitable, or there is a path to profitability, I think therefore to that extent they've crossed that proof of concept stage. And just to kind of in a very kind of a short way, I probably think individually, each one of these businesses could potentially be 10 times larger, maybe in the next 10 years. Which is that they either grow their revenues, or they grow their operating profits, or they grow their net income at probably a 25% CAGR over a 10-year horizon. It may not be individually every year, but over a 10-year cycle. And so potentially, basically, these businesses will be 10 times larger. And even if valuations were to correct by 50% in any of them, they could still potentially be 4 to 5 times bigger as in terms of their market capitalization over a 10-year time frame, which I think is fantastic, because I think even over 10 years, the Nifty, what it delivers is probably about 10 to 12% annualized return. So in that context, which probably is around 2 to 3 times in about 10 years, versus that, these could potentially be 4 to 5 times, assuming that the businesses just end up being 10 times and not even more. So I think that's the way to really look at it, that don't just be focused on short-term valuations, but I think in the first place, be more focused on the long-term opportunity and how big these businesses could be in the next 10 years.
Okay, interesting thoughts there. By the way, viewers, some news flashes on your screen about IIFL and the credit rating cut that has come in and what it could do to the business. So that's a stock you want to keep on your mind as well. 5% lower as we speak. IFL Finance faces a downgrade risk on the gold loan ban, and as from Bloomberg coming in and say that IFL Finance may cut more than 9,000 employees if the ban persists. Well, pertinent things. The other end of the equation is if the ban indeed goes away, what happens to that? So remains to be seen, but these are pertinent things that the credit rating agency, whichever it is, has put out, and it's showing in the way the stock is doing. Let's try and talk about that end of the business and financials. Nilesh, the two more pertinent things to talk about. One, that if indeed global money is to come into emerging markets and India, then it will, and somewhat of it would be passive in nature, it might find its way into the highest weightages, and therefore banks and BFSI comes into the picture. And from maybe a global investor's perspective, when they look top down and look at valuations which are not looking expensive, banks might feature in their list as well. Do banks feature in your list as a result of these arguments, plus maybe impending credit growth and what it could come in? Or are you at the other end of the street? Because I hear a lot of people saying that we don't want to do anything with banks because there are other pockets which are better to invest in, because I'm not a global fund and I don't have a compulsion to necessarily marry myself to the index weightage.
Yes, clearly, Neeraj, the street is divided on that. I mean, I've never seen this kind of for want of a better word, polarization in terms of the thought process as far as banks and lenders go. So I think yes, this is honestly very, very topical. And my views, I mean, in the first place, we own banks. We own, all the 4 top private banks in the country. We own 2 of the mid-sized banks as well. So we actually own about 6 banks plus a whole bunch of other financials. I mean, we own a home financer, and then we own 3 or 4 online fintechs, if you may call them. So probably at least a couple of them. So I think all in all, I probably think we own and we have 8 to 10 positions in the entire financial space, of which 6 are banks. So we clearly believe that, I think, yes, the large banks have underperformed. The smaller banks, of course, have done relatively well. But the larger banks have underperformed because there has been significant over ownership of them. I mean, if in the pre-COVID period, that was really the biggest allocation. And that obviously has changed quite meaningfully and dramatically in the post-COVID era, as essentially the ownership challenge has come. But clearly believe that, honestly, at least from a near-term perspective, expect banks to essentially catch up with some of the underperformance that they have demonstrated. And purely because I clearly believe that a slightly benign liquidity environment helps banks. It essentially helps them to raise liabilities better. It helps them to essentially, therefore, earn better spreads. So I clearly believe that this is not the time to ignore banks. This is the time to be constructive on banks, especially some of the private banks, and so clearly see more increasing allocation towards that. Number one. Number two, Neeraj, I think global investors have been essentially under allocating to India in the last 3 to 4 years, okay, especially in the post-COVID period. And if they have to put to work large capital, clearly I wouldn't be surprised if the large banks become amongst the first port of calls. So these are some of the reasons, apart from, of course, the fact that they will continue to demonstrate steady performance, are some of the reasons why we believe that banks are well poised to outperform here on.
Okay. The argument, Nilesh, that some people make about how banks are not the only source of borrowing right now for corporates, because they have other sources, and therefore the credit growth of banks need not necessarily be commensurate to the growth of capex in the country, and therefore they may underperform. Is that a valid argument, or are there chinks in that argument?
No, I probably think there are chinks in that argument, Neeraj, because clearly capex is not going to be the only driver of credit in India. There are 2 other pockets, which essentially is the working capital requirements of businesses.
Okay.
No matter how big you are or how small you are, you need working capital. You are not just into the business of building capacity. I mean, after building the capacity, you've got to run a business, you've got to manage working capital, and higher growth, higher economic growth, higher business growth calls for more working capital. And clearly the banks are in a vantage position to provide working capital requirements and take care of the working capital requirements. So clearly, I think that's one area. And 2 is, even on the retail side, even now, a very large part of that demand is being met by the banks, even on the retail side. I mean, look at the retail portfolio, the size of the retail portfolios of banks versus the size of the retail portfolios of the other players, the non-bank players, or maybe even of the fintech. So I clearly don't think, Neeraj, it's an either or. I think you buy banks to essentially kind of provide stability to your portfolio, and you probably buy specialized non-bank lenders or some of the other fintechs to essentially for either higher growth or to basically focus on opportunities which banks are not well placed to do, which could be online savings, online investments, online insurance, the world of payments. I think these are very, very interesting hyper growth opportunities, which I think banks are not relatively well placed. So I think you own banks for the credit requirements of the economy and for the stability to your portfolio, and you own some of these bottom up online fintech plays or specialized lenders to take care of, not just the credit opportunity, but many other opportunities like protection, payments, and investments.
Got it. Okay. Okay, Nilesh, the other aspect is IT, and that is befuddling me and befuddling a lot of people, right? And yesterday's comments from TCS at an analyst conference, or Accenture supposedly saying in an internal memo to people that we will do these promotions after 6 months, and people saying, oh, that points towards stress. I'm just trying to understand, is it just a very difficult environment to predict even for companies, because the commentary looks slightly chalk and cheese in a matter of 6 months odd? And how do you think about it therefore? Okay, let's start with that question first.
So Neeraj, I think clearly, when we look at IT and I think we need to really look at, say, the top 4 or 5 players, and then we look at the next bunch of whatever, 20, 30, 40, 50 companies which are there. The top 5 companies, Neeraj, even over the last decade, have struggled to grow north of 10%. Okay, I think if you were to kind of look at if you were to basically take away the depreciation of the currency or the strength of the dollar, I think in dollar terms the growth would probably have been at best mid-single digit. Okay, and then if you were to further take out acquisitions, the organic growth though would still be probably just about that 5% odd level, or maybe even lower. So I clearly believe that even over the last 10 years, these big companies have probably at best grown at about 10%. Obviously, they have been fantastic capital allocators. They have essentially undertaken year-on-year buybacks, which have shrunk the equity, improved ROE, and contributed a bit to the earnings per share growth. So I think if you're looking out for those, those 10, 12% kind of returns, maybe that's a good place to be in. But I think going forward, the risk of automation, the risk of AI being increasingly adopted by the Fortune 500 companies, and the kind of huge hundreds of billions of dollars of investments which whatever the Magic 7 have are kind of undertaking. Clearly, what it implies is that the headwinds for the large Indian IT services companies, or the big IT services companies, are only going to magnify further. So I think one needs to kind of look at them in this backdrop. I mean, they continue to be capital efficient, they can score high on governance, and they're fantastic capital allocators. But I think they will fall short of growth. So to that extent, I think one has to be very careful about allocating to them. Having said that, but there are very interesting opportunities in the tier 2, tier 3, tier 4 space, where there are specialized IT services companies which are doing engineering, R&D, which are focused maybe just on the BFSI space, have interesting products, platforms on that side. That's really the space to kind of really be focused on for higher growth. And I think probably that's where investors ought to be, rather than the very obvious top 4 or 5 names. The top 4 or 5 names would, I think, be nice short-term opportunities when they kind of when the valuations are slightly below their long-term averages. You buy into them and play for that valuation arbitrage or P arbitrage. But I think beyond that, they clearly don't seem to be the best of growth bastions.
Okay, so well, it's a surprise, not a surprise really, but it's an interesting point, viewers, that here we have a smart money manager talking about focusing on the mid cap and the small cap, and or the mid-sized IT companies as opposed to large caps, whereas the common narrative is that large caps are way cheaper than the mid caps. But maybe there is a reason for that to happen, I guess, and I think Nilesh kind of briefly enumerated it. Just wanted to mark that in today's session, mid caps and small caps have come off now from the highs of the day, so bear that in mind. But Nilesh, sticking to this point, what businesses, I mean, are these in the ER&D space? Are these product companies, or are these pure play IT services companies? I'm not asking for stock recommendations, but just trying to understand which are these businesses which are doing good work. They may not be good stocks to buy because they may be overvalued, what have you. Just trying to understand this. Which space do they belong in? Even if you can't take names, what buckets do they fit in?
So they fit in all the 3 buckets that you alluded to, Neeraj. I think the R&D space is very interesting. The engineering R&D space, where we have a bunch of high-class companies which are delivering solutions around engineering, R&D, product development, to a bunch of automotive companies, to aerospace companies, mobility, high tech, manufacturing, that space. So they're not those conventional IT services companies which are essentially deploying enterprise-wide solutions for the big companies, but they are providing some very, very specialized engineering and R&D oriented solutions to some of these very high growth sectors. So I think that's one. The second essentially are product companies. There are a bunch of product companies which have either core banking solutions or some of the other solutions around the core banking solution targeted towards the BFSI space, the global BFSI space. So I think that's a very interesting kind of a space or an opportunity. The third in services, Neeraj, I think it's still a bit early days, but look out for companies which are developing very strong AI practices, which they can basically then execute and implement for their clients. Mind you that in the next 10 years, the spending around AI is going to be huge. Obviously, we are not going to we won't have sufficient AI creators, but we are definitely going to have several companies which build strong expertise in deploying AI solutions for global companies and for global businesses. I think that could be a very, very interesting opportunity. And fourth, essentially, is maybe some very selective SaaS companies, which there's a strong overlap with product companies, which beyond BFSI, but probably around travel, hospitality, and maybe some of the other areas. So these are the kind of four buckets that I think investors should increasingly be focused upon.
Got it. Nilesh, such a pleasure talking to you, but that longer conversation, you gave us a very nice, succinct answer, but the longer conversation on some of the consumer tech companies awaits us. We'll do that very, very shortly. Thanks for taking the time out and joining us today, though.
Looking forward to that opportunity, Neeraj. Thank you so much.
The pleasure was ours, and viewers, thanks for tuning into this edition of The Talking Point.
फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Markets cheer the Federal Reserve's 50 bips point rate cut. Nifty trades about 25,500, while the Sensex trades at the 83,500 mark. Sectoral indices trade mixed. Media, oil and gas drag, while FMCG and auto lead the gains. And SpiceJet surges as much as 8% as its QIP attracts investments from marquee investors like Madhu Kela. Proceeds to be utilized towards clearing its dues. And the Andhra Pradesh cabinet approved the new liquor policy, adopting a private retail system. NTPC trades higher after its arm NTPC Green files papers for its IPO. The company aims to raise 10,000 crores. Welcome to the FNO show. We've got Agam back for all the FNO action as well. But Agam, we've missed you. But you've come back on a day when the much anticipated, much telegraphed event is finally behind us.
Yeah.
Fed gives more than the markets anticipated, but the markets, while positive, aren't euphoric about it just yet.
Yeah, sure. So a couple of reasons here, of course, Samina, while we saw the Nifty make a new lifetime high yesterday, to a certain extent, this event is now being factored in, and we're starting to see a little bit of profit taking, not just in global markets, but in Indian markets as well. That's not to say that we did, in fact, make a new lifetime high today as well in early opening. So I reckon that some traders are taking this as an opportunity to perhaps book some profits going ahead. And there's a high likelihood that we could potentially see some consolidation from here on. Do remember that we don't have any huge events lined up over the course of the next couple of weeks, a few weeks. So that's something that a lot of traders will have on their minds. And based on that, I reckon that now is the time when they feel that it's potentially good to perhaps go ahead and book out of whatever gains they've already made. But with that, let's also take a look at how things are faring as far as the futures and options space is concerned. So we'll take a look at the futures, as far as the futures go. Well, the Nifty is currently still up by about 0.5%. It's still holding on to 25,500. And with that, we've seen an increase in open interest of around 3.5%. But because of the fact that we have seen the Nifty come off quite a bit from day's highs, I would still question whether or not this increase in open interest is towards shorts or longs. As far as the Bank Nifty is concerned, do remember it was a good day of trade yesterday with an up more around 1% yesterday, another 0.7% up today as well. And we are looking at a very marginal increase in open interest of around 1%. As far as the option markets are concerned, today we have the weekly options expiry for the Nifty. And while we had a significant amount of call writing, or rather calls being written at around 25,500 until yesterday, a lot of those calls saw unwinding earlier on in the session. And since then, it does seem like we've seen the Nifty come off. Look at the puts as well. We have a lot of traction around 25,400 and 25,500 in terms of puts. So perhaps that'll be a level to keep an eye on. It may serve as a little bit of a fulcrum, to speak for. So 25,500 is what we're looking at. And let's see whether or not in the Nifty, in fact, ends right at that mark.
Yeah, and I think beyond the Nifty, it's the Bank Nifty that's turned out to be the star over the last couple of weeks. After months and months of underperformance, the catch-up is obvious. The street quite excited about how Bank Nifty has been doing. It slowly and gradually moved up quite well over the last few days of trade. This morning too, the picture doesn't look too bad. 0.7% higher on Bank Nifty. September futures in a premium with an increase in OI. So the bias clearly remains on the upside. Beyond that, you've got pockets in markets that are doing okay, but the rest of the market, like Agam said, could have anticipated that price hike, rate cut that's already in the price from the look of it. Broader markets are seeing some action, but they're largely domestic-facing companies that are doing well. You've got lots of those alcohol names like United Breweries, the Lucknow Industries having a pleasant day on back of the regulatory change in Andhra Pradesh. Real estate isn't doing too badly. Counters like VIP Industries are doing well. Info Edge is having it quite pleasant after a double upgrade. IT that led the losses yesterday, if we can quickly pull out what IT is getting up to, isn't really seeing much of a material pullback in today's day of trade. The VIX has dipped sharply, usually happens after the big event or any event is behind us, an 8% drop on the India VIX, and the IT index continues to reel under pressure after yesterday's sell-off. So no recovery despite the fact that rates in the US will be lower, business will pick up, not having an impact on IT stocks. Remember that the IT index is up over 30% in the last 8 weeks. Nilesh Jain and Shilpa Rath both join in with their trading strategies and perspective. Nilesh, I'll start with you. I do understand that the star of trade is going to be Bank Nifty and not Nifty, but nevertheless, a trading strategy on Nifty, and what do you recommend investors or traders to do on Bank Nifty at current levels?
Very good morning to Samina and everyone. So today, if you look at, as you rightly pointed out, that Bank Nifty is definitely outperforming. It's not today, only today. It's been from last 3 to 4 consecutive sessions now. Although the structure for the Nifty also looks strong, and I would advise at current level, one should ideally wait for some dip towards 25,450 to 25,400 to go long. But see, bias looks positive. We have seen a sharp decline in the volatility index India VIX, which has gone to almost 12 levels now, which is very much in the comfort zone for the bulls. So as of now, at current level, I think the risk and reward is still not favorable for the longs. And if at all we see any dip towards 25,450, that can be used as a buying opportunity, keeping stop loss below 25,400. And from today's weekly expiry point of view in the Nifty, I think Nifty should expire somewhere around 25,500 to 25,550 in that particular range. On the other hand, Bank Nifty is definitely a buy, looking at the kind of momentum that we are witnessing in the index heavyweight counters like HDFC Bank, ICICI Bank. I think Bank Nifty is likely to inch to a new record high. Somewhere around 53,500 is kind of level that we are expecting in 1 or 2 days. So yes, it's a buy at current level, and on dips, keeping a stop loss below 52,700. So these are the spot levels, and we expect Bank Nifty to move towards 53,500.
It's in a sweet spot on Bank Nifty. Shilpa, what about you? What is your trade on the Nifty and Bank Nifty this morning? The big event is behind us, and now we go into uncharted territories, and no major events lined up either locally or globally.
Good morning, Samina and everyone, and thank you for having me on the show. Talking about Nifty, we had a target of around 25,600 in futures for Nifty, which was actually done and dusted. So from here, some sort of profit booking is expected, and we also expect that 25,450 zone should hold on intraday basis on future levels, where we might see some sort of support coming in, and again, maybe a bounce to go for 100 points up. So one has to wait for Nifty right now and, look for buying opportunities around 25,500 zones. Talking about Bank Nifty is still well placed. It is holding 53,000, which is positive. So as long as we are holding this 50 to 900 as a stop loss for intraday, I believe Bank Nifty has still, the steam left for targets of 53,500 to 53,700 zones.
Okay, well, there you have it. That's the word coming in on the Nifty and the Bank Nifty. Of course, at the moment, we are looking at the Nifty currently hovering now back at around the 25,500 mark. And along with that, what we're also seeing is a lot more writing at exactly that particular strike in terms of calls and puts. Now, while there are several advantages, because I'm looking at the risk to reward ratio. Even if you go ahead and actually sell both the calls and puts at around 25,500, the premiums have shrunk significantly, which means that if we in fact do see the Nifty end slightly higher, at about 150 odd points away from the current market level, that is away from 25,500, well, you may not stand to make a lot, at least as far as the option expiry is concerned, considering writing straddles and strangles is a very popular method, especially on the day of expiration. We've had views from both our experts in terms of how they expect the Nifty to expire going forward. So with that, we shift focus on stocks then. Let's pull up the list of all the stocks which are seeing an increase in open interest then. And along with that, of course, we have UBL, which is up around 4.5%, perhaps partially also because of the change in the liquor policy in the state of Andhra Pradesh, which does seem favorable to the entire liquor sector. And we have about a 9.5% increase in open interest towards what looks like longs. NTPC is the other one, which is up around 3.3%. And this is, of course, after we understand that the company will float an IPO for its green business, that is NTPC Green. And that's where we're looking at a 6.5% increase in there as well. Along with that, Chambal Fertilizers, Emphasis, and Wipro under a tad bit of pressure. Chambal Fertilizers specifically is looking at a lot of shorts building in today. What about stocks which are seeing unwinding in open interest? Let's pull that list up as well. We do have unwinding in Oracle Financial Services. Now, this is a curious one because Oracle Financial Services is one of the strongest stocks in the markets if you consider its performance over the course of the last 12 months, 6 months, 3 months. But it does seem like the last 2 days have been very, very heavy and tough on everyone who's been long in Oracle Financial Services. And it does seem like a lot of the older longs are now being unwound at the moment with further weakness in this particular counter. Besides that, a lot of long unwinding in MCX, another one of those counters which has been very, very strong off late, it does seem like we're looking at a little bit of offloading coming through there as well. Persistent Systems are looking at, well, marginal short covering. With that, let's take a look at what our experts have on their radar. So, Nilesh, I'll come to you on stocks that are looking good or bad for you this morning.
So Agam, I have to buy recommendation. So if you see today, the consumption space is doing good. Even if you look at the heavyweight counters like HUL, Dabur, in fact, these stocks are outperforming in this kind of weak sentiment where the mid-cap and small-cap selling is getting intensified. So on a buy side, I have HUL, which is looking strong on the chart for further up move to continue towards 3,000 plus kind of level. So here, one can buy call option of HUL of 2,900 strike that is currently trading somewhere around 32 to 34. So in that range, this particular option can be bought keeping a stop loss below 19. The upside target would be 55 rupees. And as far as underlying is concerned, as mentioned, we are expecting HUL to move towards 3,000 plus levels in the September series itself. So in underlying as well, one can keep a stop loss below 2880 and it can be bought. Apart from that, the other stock is from insurance space, that is HDFC Life, which is looking positive, and we are expecting a sort of a strong pullback in this particular counter towards 725 to 730. So 730 would be our target in the future, so one can keep a stop loss below 694.
Right. Nilesh, I noticed you didn't mention ITC, and I believe that's the one resilient consumption name, holding above 510 quite comfortably. Does this look like a good long trade to you?
Absolutely, Samina. So, in fact, as mentioned, the overall FMCG pack as a whole looks strong to me. Even if we see Tata Consumer, ITC. So, ITC is trading in the range, and the range looks like 500 on the lower side is acting as a very strong support. It can also be bought at current level, keep a stop loss at yesterday's low somewhere around 505. And we can expect a follow-up move to continue towards 520 to 530. So, yes, ITC is also looking strong.
Okay, so ITC looking strong at around 513. Shilpa, what about you? Stocks that are on your radar this morning?
Agam, I have one buy and one sell. The sell would be in PFC. PFC, we have been recommending a sell since the levels of 500. So as long as it is holding below this levels of 500, I believe the stock can fall towards 440 to 420 zones as well. So keep a stop loss of 505 and keep holding for targets of 440 to 420. The other one would be a buy in NTPC. NTPC is also a buy that we have been constantly recommending for 400 odd levels for targets of 440 to 450. So, with a stop loss for intraday or a short term 422, one can stay long in the counter and look for targets of 435 to 440.
Right, that's the call coming in from Shilpa as well. She does have a few constructive calls. Well, just coming back to you, Nilesh, would you play for a bounce back on IT stocks? I mean, they've had a really good run, and yesterday most people thought was healthy profit taking. There's no recovery emerging just yet, even technically on some of these counters. For the next few days, would you go long IT names betting on a pullback?
So, Tamina, we have seen a stellar performance in the Nifty IT index in the August series, and in fact in the July series as well. But as of now, I think there might be possibility of some more retracement to continue in IT sector as a whole. So, as far as this particular index is concerned, which is currently trading around 41,950, we expect it to test 41,500 to 41,000 kind of levels on the lower side. So as of now, there are no signs of recovery, and we don't see any pullback on immediate basis. So we expect this downtrend to continue. So maybe 41,500 to 41,400 can be seen on immediate basis. So it's a short as of now. Better to avoid taking any contra bet till the time we see any kind of a reversal on the chart. But yes, if at all we see any reversal, that might be seen in the mid-cap and small-cap IT space.
Okay, well, Nilesh, hold that thought. We have an NDTV Profit exclusive coming your way. Sources tell my colleague Vishwanath that IFL Finance may face a rating downgrade. Vishwanath joins us with more. Vishwanath, over to you.
Right, Agam. So, if you remember back in March, the Reserve Bank of India had placed severe business restrictions on IFL Finance, specifically on the gold loan business, where the RBI said that the company cannot go out and extend loans against gold jewelry and ornaments. This had caused a lot of furor in the company. At some point in time, the company did submit a compliance report to the RBI, addressing all of the queries that the RBI had raised as part of its audit. And after that, the Reserve Bank of India has not come back with any kind of announcement regarding these restrictions that were placed. Now, rating agencies have so far been very patient, but it looks like in the latest review, which happened just a few days ago, the rating agencies might pull the rating down by a notch. Currently, the rating is at about AA. That may come down to AA minus for IFL Finance. Alongside this, the company will also have to conduct certain layoffs in its business. Remember that IFL Finance has over 39,000 employees. The gold loan employees about 4 or 5 in each of the 2,700 odd branches. Already the company is laying off employees in unprofitable areas, and going ahead, the company may have to lay off more employees as part of this program, because without gold loans, there's no point in carrying forward these employees and continue to pay them salaries. That's what sources are telling us. The last point, what we understand from our sources, is that the RBI is still reviewing the compliance report that the company had submitted last month, but there is no indication as to when exactly the RBI is going to be satisfied and remove the restrictions that it has placed on the company.
That is the big story that we are breaking right now. This is about in the IFL Finance that might face a rating downgrade, and this could be huge for the company as well. Well, in terms of stocks declining, some of these oil and gas names are coming under significant selling pressure. Nilesh, I don't know whether you track them, and I'll go on to queries in a minute, but OMCs have been under pressure because of the way crude has been moving. May not be a long trade, but is there a shorting opportunity on BPCL, HPCL, IOC?
Absolutely, Samina. So if you see the Brent crude, where we are expecting a strong pullback to continue, it has gone into extremely oversold territory. And that kind of, because of that, we are witnessing some kind of negative impact in the OMC space as a whole as well. So any pullback is a sell on rise kind of opportunity in IOC, HPCL and BPCL, all these three stocks. The structure looks weak on from a short-term point of view. One stock that is looking weakest amongst these three is IOC, where one can go short, and the downside target comes around 160, and the stop loss can be placed somewhere around 169. So any pullback towards 166 can be used as a selling opportunity in this particular stock. We expect downtrend to continue.
I think it's worthwhile to talk about Oracle Financial Services as well, because it's seen so much weakness of late. So let's pull that up. It's currently down around 3%. It was already down around 8% yesterday as well. It does seem like not only have traders, booked profits, but now it's gone into a territory of potential losses being booked out here as well. And on a weekly basis, it's now down 5%. Sony, at what point in time would you want to perhaps consider any position? I reckon going long at this point in time is perhaps an improbable profitable move. Sony, I believe you're on mute. Okay, I think while we figure the audio problem with Sony, I'll take this question up with Nilesh. Nilesh, the same question for you then, your view on Oracle Financial Services.
So Agam, this particular stock is already down close to 10% in this week in last 2 consecutive sessions. The structure is basically indicating that the stock is witnessing retracement right now of the entire run-up that we have seen. The run-up that we have seen from the levels of 7,000 to 12,000. So there are high probability that stock may correct further towards 10,600 to 10,400. Although the immediate support of 50 DMA that is coming somewhere around 10,950. So today, if at all it manages to close above 11,000, that will be considered as a positive close for a pullback. But overall, the trend is slightly on a sideways to negative side, and we can expect a sort of a downtick to continue towards 10,600 to 10,400. 10,400 or 10,200, that could be a kind of a contra buy for this particular stock, keeping a stop loss below 9,800.
Okay, there you have it. That's, your view on Oracle Financial Services. And with that, we take up queries. Well, the first one we have is Manjeet from Haryana. And Manjeet's question is how to trade SBI 800 call. Let's pull up SBI. Let's see what it's doing. And it's currently flat at the moment. It's at around 793. And, it's at 800, it's not too far away from there. Well, Manjeet has not mentioned any entry point. I reckon that he's still contemplating whether or not to take that position. Shilpa, firstly, apologies for getting your name incorrect. But secondly, also, if you could come in on, SBI at the moment and what you would recommend with this specific call.
Not a problem, Agam. I thought, Sony is also there on air, so I was not, replying to that.
Right.
Okay. Talking about SBI, I see that, since there is some sort of profit booking happening and SBI, has a very, very stiff resistance around 800 zones. So that is a very critical area where the stock is trading at right now. So if the call has to work if only 800 is breached on the upside and, it can move towards 815 to 820. Otherwise, the stock has the potential to again test below 780. So I believe if you have not taken any position yet, so, you should avoid and wait to see how the stock is moving.
Right, SBI is the call, the question coming in from our viewer. The next one is from Deepak Sharma. And he asked how to trade the Nifty 25,800 calls of September 19th expiry. Nilesh, that's today's expiry. What do you recommend Deepak to do?
Well, 25,800, if I'm not wrong, you're talking about that particular strike, then it is far out of the money strike and not advisable to trade at all. There is no premium left in that particular strike. So 25,500 is the current market price in the spot levels. And as mentioned, we expect Nifty to expire somewhere around 25,500 to 25,550. So at max, it can go up to 25,600. That's what I think. So it is better to avoid taking deep out of the money options. Rather, one can go and buy 25,500 if somebody is expecting this pullback to extend further. So shift your position to 25,500.
Okay. All right. There you have it. That's the view coming in on, the Nifty specifically. But with that, we will thank both our experts, Shilpa and Nilesh, for joining us and taking us through their views in the markets, giving us a handful of trading ideas, as well as solving some of our viewer queries. And with that, we shift focus to the commodity space. We now have with us Tejas Shigrikar. He is the Senior Technical Analyst for Commodities and Currencies at Angel One, who's joining us on the show. Tejas, good morning. Thank you so much for joining in. Well, gold at a new lifetime high at the moment. Let's start off with your view on this one. How would you trade it?
It's approximately is completely bearish in the sense it's already digests the Fed move. We can see the more massive cut in future. So probably we see the opportunities are for the precious metals at the buy on deep. So at the today's peak, we can say the gold October future. You can go for the buying scenario in an evening session could be possible. Buy on deep at 72,610 with the stop loss of 72,430, keeping a stop loss that major stop loss we can say, and targeting for the 72,100, 73,100.
What about crude? How do you feel crude is going to do, Tejas? A weaker dollar is usually good news, but with supply concerns or rather excess supply, crude doesn't seem to find its base.
Somewhere we can say in past few weeks it's having the good support area and at 5500, and now it's moving for the 600 6000 mark as mentioned in the last interview also. So we see in an evening session you can keep a buy bid at 5860, keeping a stop loss of 5790, targeting for the 6000 mark, as well as we are providing the option call for the 6000.
What about other base metals? Tejas, any trade on some of the other metals?
And for the metal pack, there's a copper having the good source of opportunity and the evening session as well. When we see the larger momentum is keep going on, even the evening session there is a jobless claim data is also going to be approached. So almost as a industry product, we can say the copper is a good buy. So September contract can keep the bid at around 806 mark, keeping a stop loss of 803, targeting for the 814.
Okay, Tejas, we'll leave it at that. Thank you so much for joining us and taking us through your views on the various commodities that we've been talking about. With that, it's a wrap on this edition of the FNO Show, but lots more lined up on the other side. Keep watching NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Welcome, you're watching the Small and Mid Cap Show. I'm Mahima Vachrajani and with me is Harsh Saita, and we're also joined by Varsha today. Well, before we move on to the managements that we have on the show for today, that is Supriya Life Sciences and Transformers and Rectifiers, let's take a quick check on how the markets are doing. Well, the Nifty and Sensex both did hit a record high. However, at present, they're off its day's highs and currently nearing its day's lows. In terms of Nifty has a range of roughly 130 odd points, and Sensex also has a range of 440 odd points, but both at its day's lows, the Sensex is around 0.6% higher. Let's also pull up the broader markets and see what they are doing in trade. Well, broader markets are under pressure. The mid-cap 150 is down around 0.8%. The small-cap 250 is down around 1.13%. Let's also pull up the Bank Nifty and see how Bank Nifty is faring out in trade today. In fact, we have seen that the Bank Nifty did have a range-bound trade in the past few days. However, yesterday it did see a significant uptick, and today also we are seeing Bank Nifty being up around 0.8%. Let's also pull up the contributors on the Nifty and see some what are the counters buzzing in trade. There is HDFC Bank, ICICI Bank, NTPC, ITC, some counters in green, and TCS, L&T, RIL and ONGC in red. Let's pull up the breadth of the market and see where is the market skewed towards today. Well, interesting graph there. The declines, of course, are more, so it's a seller's market again today. It's 1,500 odd declines versus 500 odd advances. So the ratio of declines to advance is 3:1. Let's also pull up the sectors and see what are the sectors that are doing well and which counters are not doing well. Well, it's the Nifty FMCG that is standing out today, up around 1.3%. Nifty Bank up 0.8%. PSU Bank also doing well in trade today, up around 0.8%. But something that's under pressure is Nifty Media, which is down around 1.17%. Nifty Metal also down around 0.7%. But let's shift focus to InfoEdge, and InfoEdge is the next one of the stock which is buzzing on the back of a BOFA note, and Rucha is joining us now to tell us more about that. Rucha, what is the note saying exactly?
Right, so InfoEdge has been upgraded by Bank of America from an underperform rating to buy rating. Now the target price has been increased from 5,185 rupees to 9,000 rupees with an upside of around 17%, and the stock today is also up around 2%. Now let me talk to you about the details behind this kind of an upgrade. Naukri remains with a dominant position is what the brokerage house believes in the industry, and the brokerage house also does not see any kind of disruption in the core business. Now Naukri is the online recruitment business, which is the core business for InfoEdge. Now moving on to the IT hiring, now many people are expecting IT demand also to revive revive next year. And therefore, the brokerage house believes that the increase in demand by IT will also increase the hiring and hence support the business from Naukri for Info Edge. Talking about the strategic investments of Info Edge, that is Zomato and PB Fintech, now the brokerage house believes that this one could also aid in growth on the back of fundamentals, and it also expects that more than 50% of the margins are being contributed by Naukri, is what the brokerage house believes. So very much bullish on the core business Naukri and the strategic investments Zomato and Policybazaar. Lastly, talking about the target price, now the target price of 9,000 is based on a SOTP basis, of which 33% is coming from Zomato and PB Fintech. Talking about the remaining set of segments, that is matrimony, real estate, which is showed up in Jeevan Sathi and 99acre segment of Info Edge. Well, the brokerage house is not expecting any kind of pickup in these segments and is also not factoring that in the 9,000 target price. And also from the other small startup investment that Info Edge has done, the brokerage house does not expect any kind of uptick or growth coming on from that investment. So all in all, just summarizing in 2 lines, number 1, very much bullish on the core business Naukri, and number 2, Zomato and PB Fintech to aid growth.
All right. Thanks for that, Rucha. Of course, Info Edge in focus. We spoke with the co-founder of Info Edge just about last week. Interesting chat. But let's move on. We have Satish Wagh, Executive Chairman and Whole-Time Director at Supriya Life Sciences, joining in to talk to us about lots of pieces which are moving here, including, of course, CDMO. Welcome, sir. It's a pleasure having you here.
Good morning.
So first off, on the CDMO business itself, just talk to us about what this will entail. How quickly will this start to come on stream, grow?
You see, you must have seen the good performance since Q1. The EBITDA, what we delivered is 39%. And as I promised, revenue growth was also 23%. CMO and CDMO projects which we are currently handling, we definitely take off in a short period. We already have got a lot of products and a lot of things in our hand, which we will be concentrating in the next future, and we will do better as far as the markets are concerned in Europe, Latin America and North America.
Well, Mr. Wagh, this is Varsha. So, as we all know that US Biosecure Act has been passed, now how this will benefit Supriya as a whole?
See, madam, basically Supriya Life Science Limited is bound for exports. If you see out of 100%, 90% of our production goes in exports. And we are already in these markets for exports more than 28 years. The major share is Europe, which is almost 48%. We are slowly penetrating into US market, but we are confident in the near future, we will do best in Latin American countries and US.
Mr. Wagh, Mahima also joining in. Talking about the CDMO business, you've entered into a 10-year contract with a European firm recently. So I want to understand that, are there another partnerships that you're looking for? Are they in your horizon? And, I also want to understand that, from a long-term perspective, are you also looking for such long-term collaboration when it comes to the CMO and CDMO space?
As far as CMO and CDMO space is concerned, we are already working with 3 to 4 companies. Because of the confidential agreement, I will not be able to discuss anything. But let me tell you, Supriya's focus is more on the products which are coming all over the world from China. We are going to crack some products which are exclusively manufactured by 3-4 manufacturers in China. Those products will definitely deliver us better results and better EBITDAs in the next few quarters, and the regular ones will definitely come in the whole of the year.
All right. So where does this go, sir, just in terms of opportunity? While you start to eat into China's market share likely, how quickly are you going to scale this opportunity? How much is this opportunity going to grow by? What do you do currently? You've spoken about 3 contracts that you're working on already. Of course, we're not asking you for specifics, but just in terms of numbers, how does it shape up for you?
Sir, I will just give you a brief. Ambernath site is a new site which will be starting. The module is operational by end of September, and the total capacity will be roughly around about 300 KL. And the Lote Parshuram, our old site, will have another 1020 KL capacity. You can understand the capacity is hugely increased. And these products which we are talking with you, which is a sustainable EBITDA is there, their products are anesthetic, antibiotic, and many more categories.
Understood. And are you confident about holding on to your margin number? Of course, CDMO is a better margin business technically, but your margins are very healthy, 35% plus. Do you expect that kind of margin trajectory to continue even as you continue to scale and grow?
As we told you just now, two expansions which we did. One is at our basic site, Lote Parshuram, another is Rambarnath. These all products which are coming from our R&D, research and development lab, and these products are ready for operations. These are the products which will give better margins, better EBITDAs than even CMO and CDMO projects. Because exclusively for these products manufactured are in China, and there are only 3 to 4 manufacturers. They are taking care of the entire world market. So we are not going to fight with any manufacturer in India, but we are going to take the business from China. And we have seen people are very much interested in signing the contracts and coming forward for these products.
Well, Mr. Wag, just stretching a bit on margins, considering that the future growth would be driven by your new APIs, can we expect some margin pressure? Now, why I'm asking this is because once, until the product matures, could we see that pressure on margins for next maybe 2 years?
It's not like that, madam. See, as I told you, these are exclusively manufactured by China. And today, for last couple of 50 years, I can say, China is the only country which is giving all these APIs to all over the world. We have taken the advantage of that and we have developed our own process. And we are currently talking with all over the world, where in US, Latin America, and in Europe, and people have shown interest. They doesn't want to continue more with the Chinese manufacturer, but they prefer to go with Indian manufacturers.
Also,
and Supriya is going to take away the cream of that product because there is no competition from India at all. In fact, the domestic market is also requesting us regularly to feed these products in Indian markets, but for better margins, we prefer to continue our share, that is 90% exports and 10% in domestic market.
This new APIs, these will be backward integrated, like the current.
Fully backward integrated, and there won't be any player who will come from India at all, because this chemistry is a very different chemistry itself, and it requires huge investment and the techniques of the process.
All right, Mr. Wag, so then, we want to understand the revenue structure overall. Currently, what is the kind of revenue contribution from new products versus existing products? And going forward, how will the revenue mix shape over, let's say, over 2 years down the line?
Madam, I cannot say anything on numbers are concerned, but I can definitely tell you that we will do our best because our capacity at Lote Parshuram is increasing. And at Ambernath also increasing. The new basket which will be coming will give almost better revenues and better EBITDAs.
But so just a thought process over the next 3 years. How would revenues compound? Would you double revenues in the next 3 years? Is that something that we can expect in terms of steady state?
Yes. We can definitely say that.
Okay.
We will develop, and we will double up with our better EBITDAs. See, I always believe turnover is not important, but the EBITDA margin in the balance sheet is very important because that gives you most courage and most whatever things are required as far as companies is concerned. It's a strong balance sheet.
Understood. And just very quickly, with regard to CapEx, you've obviously put up a new facility. any capex still pending on that facility, or you've pretty much fully incurred all the capex required? And going forward, what are capex plans therefore?
Sir, both the manufacturing sites are concerned. The capex almost 90%, 92% is over.
Got it.
The products, the plants are going for qualifications, and they are ready for operation within another 20-25 days. And in the future, there will be some more capex required, because capex is the main thing of the industry. So as the requirement comes, we are ready for the capex also. There is no need for waiting, because I always believe you should have at least 3 years plan advance with you, so that you understand what are you going to manufacture, how much capex you are going to do, what is your turnover, what is going to be your EBITDA. That I have really understood in my 39 years of life and my career with the pharma industry.
Got it. Sir, roughly you do 600 crore in terms of top line. You have a margin currently just a little below 35%. You are expecting top line to double. You are expecting margins to be around 35 to 40%. So you'll have nearly 300 to 400 crore of cash flow. Of course, currently you have around 200 crore of cash flow. You're debt free, so there's no interest payout either. So roughly 250 odd to 300 odd crore of cash flow is what you have coming through. Where are you going to put to use this, at least for the immediate year or so?
So for the future, we earlier also have given the statement that we have taken a land at Patal Ganga MIDC industrial area at Isambe village. There we are going to have, we have already taken 25 acres of land. The capex has been done towards land is 58 crores. That land will be utilizing for our future.
All right. And, in your Q1 presentation, you had mentioned that there are 18 APIs which are already submitted under the USD MF. So I want to understand what is the progress there, and what is the kind of expected timeline for further submissions and approvals going forward?
Ma'am, some of the products, drug master files are on the final stage. Some might take another 6 months to 1 year. But as far as these products are concerned, so small quantities are already being taken by these manufacturers, the buyers, and they are already putting their trial batches.
All right. You've also mentioned that, you're expanding into controlled drugs portfolio. So can you give us more details as to what's happening there?
Few products, like 3-4 products in controlled substances we are going to add. These controlled substances, again I'm telling you, are only manufactured by China. They are the major players as far as manufacturing those products are concerned. These products were asked by some of our end users in Europe and US and given an assurance, forwarded the advances also for that, for the R&D is concerned. We have completed, and those products will be penetrated into European markets and US markets. And the basket will be completely full as far as the controlled substances are concerned within the next 6 months to 1 year.
Mr. Wag, your top 3 APIs contribute almost 44% to your top line. Now, where you want to take this number, say in next 2 years, considering you've got new APIs coming online?
Madam, my aim is always, wherever I'm not present, I should be present in that vicinity. If you see today, Supriya is present in 128 countries. We always have a plan, at least to add 5 to 10 countries more and keep our basket growing.
Also, in next 3 years, where you want to take your CDMO contribution to your top line?
Oh, that I cannot tell you right now. But as far as Supriya is concerned, they will take the maximum advantage of the site, because they have a capacity of 1100 KLD, which is very high. That entire capacity will be fulfilled within next 2 to 2.5 years, not even 3 years. Within 2 years, we will see that this capacity becomes full. We are confident on that.
Also, this has been history that our H2 has been always bigger than H1. So is there any change in the trend, or this is likely to continue?
Let's just say, madam, it is sometimes seasonal, but target what we have given to the market, or target which we have designed, we will definitely achieve and we will have our share with us.
Understood, sir. Sir, with regard to new product launches, I want to, zoom in a little bit into the near term rather than what we've been looking at more, slightly more longer termish. Just in the near term, what's the kind of product pipeline like? You were planning to launch 2 products by end of FY25. Are you continuing to stick to those timelines, or is there a change in terms of timelines?
The timelines what we have given, before that we will be delivering that. Currently, we are increasing our portfolio in anesthetic segments and any anti-diabetic segment also. Anti-hypertensive also, we are launching one product which will be coming only from China's basket.
Okay. And sir, just last off, with regard to capacity, you've suggested in 2 to 2.5 years, you'll max out capacity at your current plants. So what then? What's the next step? Of course, you've acquired land now. When do you start putting up capex there?
See, basically the land which we have taken, the land is under environment clearance with the government of Maharashtra. Once the EC comes, we will immediately put up our investments and we have a definite plan what we will be doing at Isambe village and we will proceed for that.
Understood. And with regard to debt, you're largely a debt-free company. Will you continue to remain so? Is that the objective?
Sir, I can tell you, I am always telling that debt-free company should be there. And I made Supriya Lifestyle debt-free before going to public also in the share market. And I will continue to move the same way, a debt-free company. And whatever accruals we have on those accruals, we keep on expanding.
Also, Mr. Wagh, your Lote Parshuram facility, US FDA was supposed to come for an audit. Any progress there?
So far, madam, there is no news, but we are ready. Anytime they can definitely come, we are ready for that.
All right, sir, thank you so much. It's been an absolute pleasure speaking, really detailed conversation. Thank you for being candid.
Thank you very much for your time and giving me the opportunity.
Right. Okay, let's quickly take stock of where markets are at. Let's pull up the Nifty as well as let's pull up specific sectors. Let's take stock. There you go, 0.5% higher on the Nifty 50. We're off the day's highs, very close to the day's lows, in fact, but nothing to complain about. Sensex on a very similar trajectory trend. The Nifty Bank is what's leading the Nifty, of course, higher. Those initial gains in the Nifty IT, those have cooled off. The Nifty Midcap too, down around 1.3% now. So quite deep in terms of the gash in the broader markets. That's where all the pain continues to stick at. You're looking at the larger private sector banks leading the pack where the Nifty contributors is concerned. HDFC, ICICI, same trend as yesterday. The Nifty Bank continues to drive even among sectoral indices. Let's also take a quick look at some of the top losers. You have oil and gas down around 1.8 odd%. The Nifty Media is down 2 odd%. So that's where, at least in broader markets, is where the pain seems to be at. The Nifty Realty down around 0.5% thereabouts as well. The Nifty FMCG though up 1.2 odd%. Now I want to first off welcome on board Puneet Javeri with us, who's of course joining us for the conversation on transformers and rectifiers, because that's the next company we're going to speak to. We have Satyen Mamtora, who's the managing director at Transformers and Rectifiers India, joining us. Of course, sir, just talk to us about orders, talk to us about the kind of traction you continue to witness. The last time I spoke with you or had the opportunity to speak with you, you had spoken about the kind of very strong traction that currently you were seeing, at least back then, maybe a quarter ago. Is that trend continuing or have we started to see a bit of a tapering in terms of that top?
No, the trend is still continuing. Currently, our unexecuted order book is at 3031 crores. And we are expecting an order from RRVPNL, which will come very shortly, which will be executed by first quarter 2025.
No, so just wanted to continue this conversation, Mr. Satyan. It's Puneet also joining in this conversation now. You did mention about your current order book, roughly just in around 3,100 odd crores. In the previous quarter, you did mention there are roughly around 17,000 odd crores of orders that are under negotiation. Just wanted to understand the scope of them. Are most of them in power transformers, and what is the timeline that you see in execution for for this particular order, getting these orders as well?
So most of the orders in that 17,000 are power transformers and rectified duty transformers also. And the orders that we currently have are going to be mainly executed in the next 18 months.
And would that also mean that most of these orders that you are speaking with or in negotiation, are you seeing private sector also participating in those orders, or is it more from central and state utility companies?
So most of these orders are from the central utilities and a few from private companies also.
Right, Mr. Mamtora, such strong order traction. What does this do to your margins, and how quickly are you going to ramp up on that number? Maybe over the next year or two, where should we start to see margins just in terms of either normalization or increase?
So margins will mostly stay at about 15% PAT. And the ramp up is already been started. We will be closing our year at around 2,000 crores this year.
Understood. And just with regard to execution, you're currently at roughly 1,200 to 1,300 crore in terms of top line. Where does that go 2 years from now as you execute a lot of these orders that have come?
So from 2 years from now, we are looking at around 4,500 to 5,000 crore execution.
Just one final question, sir, very quick one, if I can squeeze in. In your presentation, you did highlight, the opportunity in the T&D sector specifically. I just wanted to understand that you have mentioned that additional requirement about 50,000 kilowatt of transmission lines will be required going forward. How much can you capture this opportunity as a company, and what could this mean for revenue potential for the industry as well? Because it's a large order it's a large number that you're quoting in this particular, going forward as well in this particular order. If you could just talk us through that a bit.
So, like I said, in the next 2 years, we are looking at closing at around 4,500 to 5,000 crore rupees. So, and the traction is very good on rectified duty transformers also.
All right. Got it, Mr. Mamtora. And sorry, just last question I want to squeeze in. Capacity available for all of this execution?
So we are currently at 45,000 MVA per annum. We are expanding our capacity by 15,000 MVA.
Okay.
So we will be closely at around 60,000 MVA.
Okay, understood. Okay, thank you so much, Mr. Mamtora. Great story playing out. 3x in terms of top line likely is the guidance, and 4x in terms of EBITDA if all of this were to play out. Thank you so much for that guidance, and of course the stock trading at over 100 times price to earnings. But if you're going to discount the next 2 to 3 years and normalize that, it's probably likely trading at maybe 15 times price to EBITDA, or rather EV to EBITDA, and therefore not looking as expensive all of a sudden. But with that, completely out of time on this edition of the Smith Show from Puneet, Mahima, myself, everyone who puts the show together. But let's quickly just, before I wrap, quickly take a look at what markets are doing. There you go. You've got the Nifty up around 1/3%. We're at the day's low, very, very likely. And let's also look at the flashes at the bottom of your screen, because interesting happening. You have Bharti Airtel, you have the Supreme Court on AGR dues, rejecting the telco's plea to review AGR dues. Of course, this is a strong negative. Vodafone already seeing that reaction, which is seen on your screen, 4% lower on Vodafone. Let's also pull up a Bharti, if we can, in terms of Bharti Airtel, Bharti Hexagon, both of those. And take a quick look at what some of those stocks are doing. But 4% lower on Vodafone, clearly an adverse reaction. Bharti, no real reaction there. Indus Towers down around 5%, almost 5% now, again at the day's low, languishing. So those two stocks languishing with the Supreme Court rejecting the telco plea to review AGR dues. And that will definitely warrant a negative reaction, especially on Vodafone. But let's quickly go across to Varun, who's standing by with all the latest on this exact issue. Varun, take it away.
Yeah, hi, thanks. So yeah, the Supreme Court has rejected the curative plea that was filed by telcos such as Vodafone Idea and Bharti Airtel that sought a limited reconsideration of the 2019 top court judgment, that it held that India's telecom operators will have to include non-core revenues to calculate their adjusted gross revenue. Now, the telecom operators had filed this curative based on the premise that the Department of Telecommunications had committed a grave error in the calculation of the AGR dues, and that they had imposed an arbitrary penalty. The top court had imposed an arbitrary penalty. Now, the curative plea was taken up by a 3-judge bench led by the Chief Justice of India, D.Y. Chandrachud, on the August of 30, but the order got uploaded today itself. Now, notably, at the time, it was an in-chamber hearing, meaning that it was not open to public. That's why we were not privy to the order up until now. But as of now, the curative has been rejected, and the court will not be taking up the telco's plea, which sought a limited reconsideration of the top court 2019 judgment.
Understood. Bharti Hexacom down 2% as we speak. Varun, I'm not sure if you're still with us, but if you are, just kind of take us through what this will mean in terms of financial impact, if at all. Would you have any visibility on that?
Yeah, so we have some kind of visibility on that. So AGR, which is the adjusted gross revenue, is basically the basis for revenue sharing mechanism between the government and the telecom operators. And in October 2019, the top court had ruled that non-core revenue must be included while calculating the AGR. Now, the 2019 judgment dealt a crippling blow to the bruised industry that stared at dues and penalties worth thousands of crores. Now, for Bharti Airtel and Vodafone Idea itself, it had increased their liabilities to more than rupees 90,000 crores at the time.
All right. Okay. And, Varun, just with regard to how this will impact companies going forward, is there absolutely any recourse to the current judgment that we can have?
No, so the only recourse that was left was this curative petition, and the telcos were actively seeking for a open court hearing because they were saying that there were grave errors on the part of the DOT and that the top court had imposed an arbitrary penalty for it. But since the curative has now been dismissed, as the top court said that they don't find any case that has been made out by these telcos, therefore no recourse remains now for these telcos.
Wow, so this is a huge adverse because from what we understand, Vodafone has around 70,000 crore of AGR dues and Airtel around 44,000. Of course, Vodafone's balance sheet not looking healthy and the picture on the stock price also not looking very healthy post this. We are now nearly 7% lower on Vodafone. Bharti Airtel holding on in some fashion, but Bharti Hexacom seeing some bit of, there you go, Bharti Airtel also absolutely flat now, given up all of those gains. Bharti Hexacom holding on to the 2% negative that it's staring at pretty much since the last 10 minutes or so. But Vodafone, there's clearly a strong reaction on that counter. We've just inched up from the day's lows where Vodafone is concerned. Very, very large in terms of the AGR due number that Vodafone has. Thanks so much, Varun. It's been good chatting and good understanding this, but we'll continue to monitor this story as we go forward. But that's all on the Smid Show, of course. I'll hand it over to Alex to carry forward this one.
Absolutely. Harsh, just to recap, this is a significant negative for telecom companies that have AGR dues at this juncture. It is important to remind the viewers that Vodafone Idea is likely the worst hit. Bharti Airtel also, as Harsh pointed out just a short while back, has dues in the form of AGR. The one that does not is Reliance Industries through Jio. And so if you look at the stock performance, Reliance Industries is also losing ground, but perhaps that's a sentimental negative for the sector as a whole. The interpretation, of course, of the calculation of AGR dues being questioned, and that's something that was taken up by the Supreme Court. The CGI, the Chief Justice of India, saying in July of this year that they will consider listing a plea by Vodafone Idea to correct the alleged errors in the computation of adjusted gross revenue. This is, of course, Harsh, something that goes back all the way to 2020, and it has been discussed several times. The judgment in 2020, at that time, people said it was very clear. It came back and it was reviewed again, and it's now seemingly the final nail in the coffin.
Absolutely, it seems like, Alex, and there doesn't seem to be any recourse to it as well, as Varun very correctly pointed out. And the sense is that there wasn't too much expectation around an AGR due waiver either, except a possible consideration that companies in the sector have anyway been through a rough patch. And maybe just from that perspective, a consideration on AGR dues, but the Supreme Court likely has gone with the more practical, or rather the more theoretical interpretation, and they've stuck by their judgment.
You know, I'm just assuming that there are a few people that have seen this and are just tuning in right now, Harsh. So why don't we recap them on what Varun also told us about the judgment? What stood out to you?
Well, the fact that there is no change with regard to the September 2020 judgment against telcos with regard to payments to be made for the 10-year period ending March 31 along with the 8% interest. That judgment stands as is, so that the dues which are required to be paid, and I'll just state those amounts: 70,000 crore for Vodafone Idea and 44,000 crore for Bharti Airtel.
Yeah,
that's the kind of quantum in terms of, that's the quantum of impact.
Let's talk about these stocks in more details. We've got Rucha joining in to give you some perspective on how badly this would affect the companies. Of course, Rucha, what we've spoken about so far is that this is something based on an earlier judgment. It's a reiteration of that, and so no relief provided for these telecom companies. What is the implication for the financials of these companies?
You're right, Alex. So going back to the AGR dues timeline now, so let me first talk to you about what are AGR dues. So these telecom companies have licenses and they have to pay a certain percentage of the revenue to the government. Now, the case was all about how to calculate this kind of AGR due. Now, the telecom companies talked about only telecom revenue to be included for calculating that percentage, but government said that both telecom as well as non-telecom revenue should be included to calculate the percentage of AGR dues, and hence the amount of dues went up. Now, talking about the timeline, well, in 2005 and 2006, government and the telecom industry, talked about how this could be calculated. But then in 2019, the verdict came against telecom players, and this has been the stance by the government and the authorities as well, that AGR dues will be calculated on both telecom as well as non-telecom revenue. And therefore, Bharti Airtel had already paid around 18,000 crore rupees, and Vodafone Idea had paid around 7,800 crore rupees back in 2019. But again in 2020, these telecom companies had filed a plea against this kind of judgment passed by the authorities. This also happened in 2021 as well as in 23, where Vodafone Idea made an appeal and other telecom companies as well against this kind of judgment. And again today, the Supreme Court has come out with the verdict that this AGR dues will be against the telecom companies, and hence this will amount to Bharti Airtel paying about 44,000 crore rupees as well as 8% interest, and Vodafone Idea paying around 70,300 crore in AGR dues. Well, Reliance Jio does not have much of AGR dues because it has already paid its dues and it started operating in 2016. So not much of a comparison with Reliance Jio over there, but a big hit on Vodafone Idea and Bharti Airtel is what we could see even right now.
Thanks so much for breaking that down for us. Rucha, do stay with us. We might come back to you on certain aspects. We do have Shahina Mughatan joining us right now, and Shahina has a view on the telecom space. Shahina, I'm sure that you've been looking at these companies for quite a while, the financials of these companies. In a sense, nothing changes, but that is what is negative for the companies with the massive dues. Does this change your view on the sector and on individual companies at all?
No, it doesn't change the view on the overall sector, which is positive for the long term, because the backbone of all communications in the long term is telecom, and it's just like more like a three companies that are there that will capture the overall business going forward, at least as of now. So you have, of course, Reliance with the Jio, which I think is the best placed. And even the latest news sentiment is not going to be negative for Reliance Jio. I think they have got other sectors also which are doing well. For example, they have their retail business, which is doing well. OMC business, oil business is doing well. So to that extent, Reliance does, of course, remain the topic in the overall space for the longer term. Having said that, Bharti, I believe if you see the last 1 year, the stock has given a very good performance. It's up by almost about 60% over the year. So you could be looking to add, this is slightly negative in terms of sentiment. Of course, the balance sheet is very strong for Bharti. Also, they have got a very strong cash flow on a quarter by quarter basis. So any such negative news or such payments, they can take it in their stride in the medium term. Having said that, I would still prefer Bharti to be purchased at slightly lower levels because valuations now are become a bit expensive. So any negative news, as we've just heard, affects the stock price. So I would be happier to buy it closer to maybe 1,300, 1,400. Any major dip that comes, it's looking like a good ad. Vodafone, I used to say, or I had a call that you hold it with a stop loss. The stop loss has been triggered. So I think now investors should get out of Vodafone. The balance sheet looks very stretched, very difficult for them to come out of all these issues. And I don't think, they're getting too much support from the government who also holds stake. So I think Vodafone has become extremely risky and investors should exit.
Okay, that's a fair point. I'm curious also, Harsh, about Indus Tower because the conversation primarily has to do with regard to Vodafone and how it's doing, right? Because the dues that Vodafone has towards Indus Tower, it's dependent on whether or not they can sort out the issues that they're facing in terms of the dues that they have for AGR, which, as Harsh has pointed out, we pointed out, 70,000 crore rupees, not a very small amount, and certainly something that's going to prove a bit of a challenge down the line.
Yeah, so just for perspective, Vodafone's market cap currently is 80,000 crore. They have a debt of over 2 lakh crore. Yeah. And of course, while a lot of this may have been expected, but 70,000 crore certainly not a small amount in the larger context of things.
I believe we're joined by Satya Gupta, who is ex-principal advisor of TRI. And Satya, if you can give us some perspective on this. The argument from the telecom companies is not new. What we've come to hear from the Supreme Court is that the earlier judgment stands. In a sense, nothing changes. What is your reading of this?
Yeah, thank you. And actually, as you know, the law of the land is supreme, and it is when it is interpreted by the highest court, Supreme Court, then that is what stands. But yes, in any business, and there is a principle, error and omission are regretted. So I think now on a national cause or on a social and governance and good principle or the justice in the word and spirit, if it has to prevail, then they have to invoke, and the Supreme Court have to invoke and take cognizance of error and omission, permitted or regretted, what they call it actually. So, and they can get a audit done by a independent body, which is not the normal statutory auditor or neither the CAG, maybe someone more unbiased or more, let us say, unconnected in many sense.
Understood. Satya, thanks so much. Satya, thanks so much for that.
Do that audit and then let the truth prevail, actually.
Yeah, that's a fair point. Satya, thanks so much for making that point. Independent committee should audit how things are functioning with these telecom companies. That's the word coming in from Satya. Let's talk about the stock impact, in fact, and let's pull up the charts and see what is happening right now, because some of the moves that you've seen early on, knee-jerk reactions have unwound. This is not the case for Indus Towers. Gaurav Dua of Sharekhan is joining in. Gaurav, we've been talking about the latest update from the Supreme Court. In essence, nothing changes from the earlier judgment, which a lot of people are saying is a negative for the likes of Vodafone Idea, Bharti Airtel, even Indus Tower. How are you reading this development?
So, our view was something different here. What we always thought and believed is that whatever be the verdict of the Supreme Court on the AGR issue, Bharti Airtel as a stock will do well. And that is what we have seen. Why is that? If the AGR verdict is in favor of the telecom companies, Bharti Airtel, just like other players, will stand to gain in terms of the outgoes that they'll have. On the other hand, if they lose the case, then it would mean the end of the road for Vodafone Idea, which means that the market will move from a 3-player market to a 2-player market now. Now that is a good news structurally for Bharti Airtel, and this would mean that the tariff hike that we have seen this a month or so back in the industry will further pick up pace because of the easing out of the competitive industry. Intensity in the industry.
I think we'll get in Ajay Puri in moments from now as well. But Gaurav, the question is this. So we know that this is maybe okay news for Bharti Airtel, but it's a big letdown for the expectations that Vodafone had. How much does it dent Vodafone's ability to make a better business case? Because they have made a business case, they've got some capital, but how much does this dent, or you think it doesn't, and this is a knee-jerk reaction?
Don't have active call on this Vodafone
no, which
idea,
is fine.
So I'll not be able to get into
but
specifics.
Gaurav, I don't want you to comment on whether the stock is a buy, sell, hold. I'm just trying to understand about the business case. How much does this? Because they've got an equity capital, they've gotten a further fundraise. They were hoping for this to happen. That it hasn't happened, does it impede their ability to make a better business case?
Of course, this will have a problem for this Vodafone Idea, because the whole survival now is again back in question, and that is clearly being reflected in the stock price today.
Is under question, Gaurav. Did I hear you say that?
Yes, because it will become more and more tough for them to actually raise money from here and grow, because it's not only about surviving, it is also about growth, and you need to invest for that. And Vodafone Idea, compared to its peers, have been lagging behind in terms of their investment into network, and this will make it all the more tough for them.
Point. All right, that's something to raise. Thanks so much for joining in, for getting us this perspective. Ajay Puri, former COO of Airtel India and Southeast Asia, joining in. Ajay, your initial thoughts, status quo maintained, and that is a negative. I'm not sure if you can comment on all players, but we're curious about what you think that this will do for the operations of the telecom companies that have significant dues.
Having me on the program. I think it's for me, I think it's industry was expecting a relief from here, because there were some apparent errors that were there, and industry was only wanting to get those reviewed, apart from penalties and interest being reviewed. It's a bit of an unfortunate situation, but we need to respect the verdict of the Supreme Court. I think one thing is very clear, that government must make every single attempt to keep the industry as a 3-player industry rather than bring it down to 2-player industry. As your previous discussion was happening, we don't want to see India going to a duopoly. 3-player is a good construct, plus government operator as its 4th player, and we should not under any circumstance let Voda Idea bundle up under the pressure of this verdict. And government has done some very good pioneering work in the last few years in terms of telecom reform. Part 1. I would urge government, and I think they have within their withal, to do the part 2 of the telecom reforms and provide the relief to the industry. It's a mammoth sum. It's a mammoth financial number. So, and industry health is obviously at a risk despite all that has happened. And the third player is really struggling at this stage. So I would expect that government will come forward. They have all the executive powers, available to them. And they can do, whatever needs to be done to keep the three-player industry healthy and active. I mean, finally, India needs the digital growth. India needs digital highways. And India needs an industry that provides all that in a very healthy space. So I would urge the government to intervene now, to make sure that India remains a three-player healthy three-player telecom market.
Yeah, no, point well noted. Mr. Puri, we're also getting in Balaji Subramaniam, of course, Vice President of Research at IFL with us as well. And would be lovely to get both of your views together. So, Balaji, we're just speaking to, Mr. Ajay Puri, former CEO of Airtel, and he's saying that now there is a bit of a ball in the government's court to try and come forward and help the struggling and pass a reform which will also help the industry at large, but help the third player which is struggling. My question to you is, Vodafone is on a lower circuit today. There were expectations from Vodafone that this will be passed. It has not passed. Some people say this could very well threaten the survival of Vodafone. Do you go as far, or do you just believe that it makes their revival process a bit weaker?
So the revival process definitely gets, it does receive a fairly significant setback because the kind of relief that would have come through, assuming 50% relief on the total dues of 70,000 crores, would have been to the tune of 35,000 crores, and that is a pretty sizable sum. And, that means that on a fair value basis, it's about rupees 5 per share. Which is quite significant, and more importantly, once the moratorium on these AGR payments is lifted later next year, it would have brought down the annual payment or the annual cash outgo by about 8,000 odd crores. So that is a pretty significant relief which Vodafone Idea will now not get. So that gets pretty tricky on that count. Now the thing is, even though Vodafone Idea managed to raise equity, they are still in the process of raising bank loans and debt. So now, what happens to that process, that is most likely going to get prolonged, because you'll have this also weighing in, considering the weekend cash flow position after today's verdict. The lenders might go a little cold on the trail. So that is the critical thing. So if they are able to manage to tie in debt funding, then the story will more or less continue. But if that process also starts facing delays, then in the interim they will continue to lose market share as they have been losing all these years.
Mr. Subramanian, Harsh also joining in. Quickly, with regard to the cascading impact on Indus Towers, your view on that one?
Balaji, the question is for you.
Okay. So, as far as the cascading impact on Indus Towers is concerned, see, if there is a delay in fundraising by Vodafone Idea, then of course the network rollout of Vodafone Idea will also be slower. That will be, clearly negative for Indus Towers. So, to that extent, there can be both, time delay impact and fewer network sites which Vodafone would have otherwise rolled out.
So, if you can just quantify the quantum currently which Vodafone owes Indus, and what's your sense? Is that going to go up, going into maybe the next quarter or the next year?
While they haven't kind of quantified it explicitly, my estimate is that around 4,500 to 5,000 crores is what Vodafone owes Indus. These are the past dues, and Vodafone has been paying Indus on time for the last 12 to 18 months. So in the near term, those payments should keep coming in. The bigger challenge will be what happens 1 year down the line, because that is when the moratorium will get lifted and Vodafone will have to start making large cash flows to the government. So to that extent, I don't see, at least in the near term, the overdues building up. But after a year, if Vodafone is still unable to raise funds, then there is a risk that the overdues again start building up. But frankly, this is all too premature.
No doubt about that, Balaji. I do want to get your view on the next question that I'm going to ask Ajay as well. So maybe based on his response. Ajay, I'm curious. You mentioned that the government should step in for the health of the sector, but there's also the fact that it is invested. It is an owner of stake in the company, in Vodafone Idea, and so therefore it would benefit, of course, from the continued survival and performance of this company. What, in your opinion, are the steps that can be considered? You said that measures should be taken, a review should be done, but let's talk about steps that can be taken. What, in your opinion, should be done?
Yeah, I think one, government can create industry-friendly part 2 of the reform. They can look at the entire tax structures if that is needed to be reviewed, because industry has been seeking, review of the tax structure. They could also look at the whole penalty and interest part of the order, and also if industry has listed out that these are anomalies in the tax calculation, AGR calculations, if government can have a look at it and see how within the legal boundaries they can acknowledge it. I mean, there is no harm government to have do a review themselves, look at it, or waive off the penalty interest, or find a way to, give industry a relief, because this is something that is, as we all know, over-exaggerated sum in, with due respect to everybody, and that needs to be corrected for. So industry was expecting Supreme Court to intervene, but that hasn't happened, unfortunately. Let government intervene and come forward and say, okay, we're willing to review it and we do X, Y, Z.
Balaji, is that something that would be the final potential savior for a company like Vodafone Idea if the government were to review the penalties, as Ajay has just suggested? Is that the only option available?
See, frankly, I don't know. As in, what can, constitute a potential contempt of court? Because last time when there were discussions by the government on the aspect of doing a recalculation, the Supreme Court was dead against it, and it came down hard on the DOT. So, frankly, I don't know. As in, how much leeway the government has got, and frankly, I am not a legal expert, so I don't want to comment on that.
Balaji, I just have one question, and the same question then for Ajay Puri as well. But the government, when they convert the further dues into equity, I mean, it just becomes a very large equity. It's the great intention to have a 3-player market. It's the right thing to do. Do we now run the risk of this third player being considerably weakened? And again, I just bring this back. In all the communication that Vodafone has put out every time, they were hoping for the AGR outcome to be in their favor. It was not the base case for business, right? I presume. And if that is not the case, why? I mean, is fundamentally the logic of Vodafone being a strong third player flawed, or is it not?
Even if this, assuming this relief came through, still Vodafone would have had a pretty stiff ask, because a significant portion of their liability is related to the spectrum that they have, and I don't think that liability is going to go away. So to that extent, even in the event of a favorable verdict, I would have expected some bit of government due conversion into equity to happen at some point in time. So now the thing is, the potential dilution risk is even higher. So I would believe that if the banks are willing to lend 25,000 crores, which the company has been targeting, I think if that comes through, still there is some room for hope. As in, it's still an uphill task because right now Vodafone's market share is around the 16-17% mark, and I don't think that is going to substantially go up even in the event of a favorable verdict. But now, the battle would shift to ensure that this doesn't, further keep sliding down.
Balaji, will take 2 moments of your time, but because I would have one more question for you, I'm sure Harsh and Alex would too. But Ajay Puri, the belief might have been that the low-lying hanging fruit of 2G customers, which Vodafone had a plenty or has a plenty, moving to 4G as their 4G arsenal becomes more powerful, would be a telling case for Vodafone's revenues to naturally move up. I mean, does that still stay to your mind or that doesn't?
See, I think my understanding is that Voda is on a course of trying to recover from where it was and compete. And I think that course will continue. It might get a little bit of, obstacles unless the funding comes in terms of the loans and borrowing. But if it does come through, they will certainly put up a brave fight with 4G investments and, filling up their gap. But I think the important thing is it is a government to decide.
Yeah.
Do they want India to be a 2-player market or a 3-player healthy market?
Agree.
Do they want second question is, do they want a healthy telecom industry or they want a fragile?
To be fair, Ajay Puri, I mean, the government has shown its hand in some fashion, right? They have helped Vodafone in some fashion.
They have.
But in this case, it's beyond the government's case. But, therefore the question, and my last question, at least, I don't know if Harsh and Alex have more, but my last question, both to Balaji and Ajay Puri, is this. Post-moratorium, brokerages estimated an annual payment of 48,000 crores. It's one of them. I don't know, Balaji, what your number was. But now that most of the things that we know, unless what the government decides to do is not known, but everything else is now known, do you expect the subscriber gains for a Bharti and a Jio to be accelerated in the months to come? And therefore, what is Vodafone's pain and maybe Indus Tower's pain? Would it be Bharti and Jio's gain?
Can I come in?
Yeah, Balaji, the question is to you.
Okay. I mean, this was Ajay.
Oh, Ajay, sorry. Okay, Ajay Puri, maybe you make this point. Sorry, but the voice confused. Maybe you make this point and then I'll go to Balaji on this. Please come in first.
No, I personally believe, we should not, both Bharti Airtel or Jio should not see it with a narrow-minded approach here. Some gains for the short term do not do good for the industry in the long term, right? So I think, and this has been stated very upfront and clearly by many, leaders of Airtel, including the chairman, that India must have a 3-player market.
Ajay,
we should not look at...
Ajay Puri, sorry, the only reason I'm stepping in here is that from a telecom industry perspective, completely buying that. But there is an event that has happened, and as an anchor, I also have to try and make my viewer know, who's an equity investor, about whether from an equity investor's perspective, currently, is Vodafone's pain Bharti Airtel's and Jio gain? So that was the nature of my question. I completely buy your point that it should be a 3-player industry for the country and for the consumers like me and you as well. It's better to have 3 strong players. So I'm buying that completely. The only reason I asked this question, and to Balaji specifically, was because I owe this duty to my viewer that can this Vodafone Spain be gains for Bharti Airtel and Jio? So that's where I was coming from. Balaji, can I request you to maybe address that question from a market's perspective? Is this going to be a gain for Bharti Airtel and Jio?
So a weaker Vodafone, so assuming that Vodafone has challenges in raising the debt funding, and subsequently that has an effect on their timelines in terms of deployment of capex. That means that the window for market share gain for both Bharti and Jio gets wider to that extent. So, that would be clearly positive for Jio. For Bharti also, that will be, it will be a positive, even though, they would have also benefited to the tune of around 18,000 crores if they had got this relief. So, to that extent, it's somewhat mixed for Bharti. And whether it is outright positive for Bharti, it will depend on, what happens to Bharti's rollout program.
Balaji, I'm just curious, I'm jumping in with one quick question. Does this change your calls at all on companies in the telecom space?
See, I have been positive on Bharti and Vodafone. I had an ad recommendation, but of course, now this needs to be now analyzed in light of the fact that one is the direct hit of rupees 5 per share because of this release not coming through, and the other would be what happens to the overall capex program. So clearly it is a substantial negative for Vodafone Idea. As far as Indus is concerned, of course, that will also, they will also bear the brunt of this. So I would stick to both Bharti Airtel and Bharti Hexacom as my topics in the space.
Okay, fair point. Thanks so much, Balaji, for joining in and giving us the perspective that you did. In case you're joining in right now, we've had an entire conversation about the latest update from the Supreme Court. The AGR case, of course, that goes back several years, the status quo has been maintained, and that is being viewed as a negative. The plea that was made for the calculation of AGR dues by Vodafone Idea primarily has been shot down by the Supreme Court. Rucha is joining in to give you a perspective on what this is all about in case you've missed it today and over the course of the last several months and years. Rucha, what can you tell us?
Thanks, Alex. So I'll start with what are AGR dues first. Now, these are the dues which telecom companies have to pay to the government in the form of percentage of revenue, and this is for using the spectrum license. Now, the case was all about that government had calculated this kind of dues as a percentage of total revenue, that is telecom as well as non-telecom revenue. But then the telecom companies later believed that only telecom revenue should be included in calculating this kind of percentage. And therefore, these telecom companies had filed a plea against this kind of calculation. But the latest development over here is that Supreme Court has rejected this kind of plea by the telecom companies, and this means that the percentage of revenue to be used for calculation of this fees would include both telecom as well as non-telecom revenues, and hence would increase the liability of the telecom companies. Now, if we move on to the next slide, we'll see that the kind of AGR dues which each company is required to pay to the government, starting with Vodafone Idea, it owes around 70,300 crore in dues to the government, which is the highest amongst all the three players. Next one is Bharti Airtel, owes around 44,000 crore in dues to the government. And lastly, Reliance Jio, there are no such particular dues to be paid to the government because it only started in 2016 and it has already paid the dues which it had to. So no further dues are likely for Reliance Jio, but we'll see what kind of cash lies on the balance sheet for Vodafone Idea and Bharti Airtel. Well, Vodafone has 535 crore of cash against a 70,300 crore liability. I mean, a huge sort of asset liability mismatch over here. Bharti Airtel has around 16,340 crore cash on balance sheet against its AGR liability of about 44,000 crore. So clearly, Bharti as of now stands at a better position than what Vodafone Idea does. But then let me move quickly against the timeline. Now, back in 2005 and 2006, government had this kind of issue about calculation of these AGR dues, wherein it mentioned about using both telecom and non-telecom revenues for this kind of due. But naturally, telecom companies did not agree, and hence they filed another petition, if we can move on, in 2019. But then again, the verdict went against the telecom companies, and Bharti Airtel paid around 18,000 crore of dues, and Vodafone Idea also paid certain dues amounting to around 7,800 crore. Back in October 23, again Vodafone and Bharti Airtel together had filed in October 2023. If we can move on to the next slide, and coming to the last timeline, we can see that these companies had filed a petition against the initial judgment by the government. But then today Supreme Court denied that kind of plea, and I think this is the last stage, and now these telecom companies will have to pay this kind of dues back to the government.
All right, thank you for breaking that down in great detail. Let's quickly pull up, the couple of stocks which have seen an impact. Vodafone, of course, now 15% lower. We've seen a second circuit on Vodafone, so that continues in free fall, at least as we speak. Let's also pull up Airtel, where we're not seeing much of an impact, but Indus Towers 2 down, now 12.5%. So maybe second circuit not hit, but nonetheless, quite a large chunk of investor wealth wiped out from this 1 lakh crore plus kind of market cap company. Ajay, let me come back to you if I can, Mr. Puri. With regard to resolution of this, what are the options available now with the industry as a whole? And second, how likely in your view is the government to listen to some of these possible options for resolution, if any? Because there doesn't seem to be much from a legal standpoint that these companies can do.
Yeah, I agree. But I think obviously one step the industry has is to go back to the government and on the drawing board and request for whatever possible relief, either on the AGR case or otherwise, that can be provided to the industry to help the industry financial health improve. Or the second option, which is always being talked about, is another round of pricing increase possibility, maybe quicker than what it was anticipated earlier, or in the event that the AGR relief would have come. Because in any case, India continues to be the lowest tariff country, providing 30-40 GB of consumption at average ARPU of less than 200 rupees. And I think India can easily take up to 300 rupees ARPU sooner than later. So maybe that's another possible relief, because that will provide a big relief to even the Voda and Idea, because their cash flows will improve, their ability to, show a better P&L and better balance sheet will improve. So I think both the options should be explored.
Yeah, Ajay, certainly a fair point. And perhaps on that front, the first steps have already been taken with price hikes announced by the industry not too long back. Thanks so much for joining in and for giving us a perspective that you had on this latest development. Well, we've given you all of the bases with regard to the latest development in the telecom space. Big negative for Vodafone Idea, to a certain extent also a negative for Bharti Airtel. It has taken it on the chin though and is off the low point of the day, trading with gains of about 0.4%. Indus Tower is not doing too well either. That's the other big hit, and that's largely on account of the dues that Vodafone Idea has towards Indus Tower. We've got more lined up over the course of the day. Do stay tuned. We've got live coverage of markets after this very quick break.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in the show we take you through all that is happening in terms of stocks which are the flavor of the season. And to take us through all the stocks, well, we have Raghavendra Kedia of Prosperity Advisors who's joining us on the show. But before I go to Raghavendra, I want to take a very quick look at the markets right now, which are currently under pressure. Now, notwithstanding the kind of global pressure that we've seen through and play out in Indian markets as well, because we saw about a profit taking after the Federal Reserve did in fact go ahead and cut their interest rates by around 50 basis points. Nifty is holding on to green right now. That's perhaps the big positive. Higher by around 0.25% and also off days lows, while it is significantly also off days highs at the moment. Perhaps the biggest news at the moment is the weakness that we're seeing in the telecommunications space, largely on account of the kind of traction that we've seen. We will come to that in just a bit. As far as your overall markets are concerned, I want to very quickly mark what's happening in the broader markets too. Then specifically the mid-cap and the small-cap indices. So they are under pressure. The mid-cap index is down around 1.7%, and the small-cap index is also down by around 1.8% at the moment. And, in terms of the latest, it does seem like today is a day where we see the benchmarks underperform the benchmark indices. Pardon me, the broader markets indices underperform the benchmark indices. Now, we start off with, of course, the first topic, and that is the telecommunications sector. Raghavendra, I know this is, a little bit out of the syllabus, and I reckon that this is a bit of a surprise for all the participants in the market. Now, of course, the Supreme Court has rejected, AGR recomputation plea, and which once again brings the question back on, the survival of Vodafone Idea, as well as there were several other companies like Bharti Airtel, for that matter, who are also perhaps are going to see some more outflow coming in as far as the funds are concerned. What is your assessment on the current latest update right now?
So definitely there was always a regulatory overhang, and currently it turns out to be in the negative way for majorly the stocks like Bharti Airtel, Indus Tower and Vodafone Idea. Vodafone Idea specifically has gone for massive equity dilution to reduce their debt, and they have gone aggressive in terms of bidding for the spectrums which have come off in the last 2 years. So there has been very aggressive capex expenditure for Vodafone Idea and Bharti in terms of spectrum bids, and in terms of debt reduction, Vodafone already has massive equity dilution. So it's like falling knife from here, and we would avoid any such trade and try, though the prices might look tempting, we would avoid unless there is this overall regulatory overhang which gets cleared. But as of now, we are avoiding the telecom space. If at all, we prefer the telecom infrastructure stocks, more like in Tata Communications or in HFCL in the small cap space. But in terms of an Indus Tower, Vodafone Idea and Bharti Airtel, we would wait and watch and avoid at current levels.
Okay, there you have it. Well, from there on, we move on to NTPC, which is also buzzing in trade. Let's see where NTPC is currently. It is advancing. It is one of the top gainers on the index right now. It's up around 3.6%. And we understand that its subsidiary, NTPC Green Energy, will float an IPO soon. Well, for that, let's get in my colleague Mihika to give us more of an update here and what that could potentially mean for NTPC as well. Mihika, over to you.
NTPC is buzzing in trade because its renewable energy arm, NTPC Green Energy, has filed for its IPO yesterday, and the company will be raising 10,000 crore via an initial public offering, which will only consist of a fresh issue, and majority of the proceeds will be used for debt repayment and general corporate purposes. Now, when you talk about the valuations of the companies, well, let's first start with the listed peers. The company has two listed peers. One is Adani Green Energy and Renew Energy Global. When you look at the EV to EBITDA multiples of these companies, Adani Green trades at a 50.9 EV to EBITDA multiple, and Renew Energy Global at 13.73. So when you take the average of these two, it comes to 32. And when you talk about the potential financials in FY25 for NTPC Green Energy, well, Q1, the company made around 650 crores of revenue. So based on this run rate, it could see revenues of around 2,600 in FY25 and a 2,300 crore EBITDA in FY25 if it maintains its FY24 margins of 88%. So when you talk about the potential market capitalization, it could stand around 75,000 crores because taking the consideration of the 32 EV to EBITDA multiple with the FY25 estimated EBITDA. And this could lead to a potential equity dilution of around 13% equity, which comes up to around 100 crore equity shares. The company has a total outstanding share capital of 750 crore equity shares.
Right, Mihika, thank you so much for getting us that update. Raghavendra, your view on NTPC and also the prospective green energy IPO, what's the way forward?
So let me start with the green energy IPO. I think this will be a positive trigger until the entire issue starts and then the listing starts. So there could be a positive undercurrent in NTPC at current levels. Now moving on to the valuations, we believe that NTPC is currently clocking an earning per share broadly of 22 rupees on a full year basis. That is 22 rupees EPS. And if we give a multiple of around 25 times, we get a price target of around 550. So that is a 25 to 30% upside at NTPC at current levels based on valuations as compared to its peers. Versus peers, NTPC is still cheaply valued if you compare with a Tata Power or a JSW Energy. So that on valuation, we see a catch-up play, plus this 10,000 crore rupee IPO of NTPC Green would be another positive trigger. So one can look to buy at current levels, or if the stock corrects to levels of 400, that could be a great entry point for a price target of 550 in the next 6 to 9 months.
Okay. Well, there you have it. That's the view on NTPC. We move on to the liquor policy that has been set up in the latest in the state of Andhra Pradesh. We have Mahima who's joining us now to give us an update on the same. Mahima, over to you.
Alex, the policy is aiming at quality, quantity and price. Now this comes after in 2019 Andhra Pradesh had almost banned buying alcohol from branded companies, and people did face serious repercussions after this. Their health got deteriorated, and after this a new excise policy has come out, and all liquor brands will be made available, and this will be from 1st of October, and private shops will also be allocated through a lottery system, and a non-refundable fee of 2 lakh will be paid for this. 13 premier shops will be set up across state, excluding Tirupati, of course, and the alcohol from all brands will be made available just at rupees 99 for every 180 ml is what the policy says. Now, a couple of companies that could benefit from this, because even before 2019, these companies were major suppliers in Andhra Pradesh. It's United Spirits, United Breweries, Tilaknagar Industries, and Radico Khetan. Tilaknagar Industry has recently launched a new brandy in Andhra Pradesh, and it had acquired Prague distilleries in Andhra Pradesh between 2008 and 14, and since then it is operating from that particular distillery in Andhra Pradesh, and roughly in FY24 the distillery had a revenue share of the revenue share from that distillery increased by 34%, and it has a capacity of over 6 lakh cases per year. The next one is United Breweries, where volumes in Q1 were largely driven by Andhra Pradesh, and it had an operating capacity of 30% only because of the ban. But going forward, of course, it will the new excise policy will benefit United Breweries, because historically Kingfisher has had a share of 75% almost from Andhra Pradesh, and United Brewery eyes revenue increase with this new liquor policy is what the MD has already said. And lastly, Radhiko Khaitan also has bottling units in Andhra Pradesh. So all of these companies and stocks will be in focus on the back of this.
Okay, Mahima, thank you for getting us that update on that one. Well, Raghvendra, your view on the entire sector now. Do you prefer or do you have preferences in this particular sector going forward?
Well, we prefer United Breweries. Even at current levels of 2100, we still see there is upside. Based on this policy, there could be some positive bias and a good undercurrent in the stock in the next few quarters. Broadly, we believe that the consumption story of India is going strong. The overall disposable income, which actually helps the overall liquor industry in terms of more and more in terms of per capita. So that's a positive in terms of the broader macro at a pan-India level also. So we prefer United UBL at current levels of 2110 and expect a 20% upside if you hold this stock for a 1 year horizon.
All right, well, we move on to Info Edge then, and this one is the next one on our list, and this one is buzzing on the back of, well, another brokerage note coming in our way. If, of course, it's come off from day's highs by quite a bit, but we do still have this one trending positively in today's day of trade. Well, let's get in my colleague Rucha to tell us more about this note. Rucha, over to you.
Info Edge has been upgraded by Bank of America from an underperform rating to buy rating. Now the target price has been increased from 5,185 rupees to 9,000 rupees with an upside of around 17%. And the stock today is also up around 2%. Now let me talk to you about the details behind this kind of an upgrade. Naukri remains with a dominant position is what the brokerage house believes in the industry, and the brokerage house also does not see any kind of disruption in the core business. Now, Naukri is the online recruitment business, which is the core business for Info Edge. Now, moving on to the IT hiring. Now, many people are expecting IT demand also to revive next year, and therefore the brokerage house believes that the increase in demand by IT will also increase the hiring and hence support the business from Naukri for Info Edge. Talking about the strategic investments of Info Edge, that is Zomato and PB Fintech. Now, the brokerage house believes that this one could also aid in growth on the back of fundamentals, and it also expects that more than 50% of the margins are being contributed by Naukri is what the brokerage house believes. So very much bullish on the core business Naukri and the strategic investments Zomato and Policy Bazaar. Lastly, talking about the target price. Now the target price of 9,000 is based on a SOTP basis, of which 33% is coming from Zomato and PB Fintech. Talking about the remaining set of segments, that is matrimony, real estate, which is showed up in Jeevan Sathi and 99-acre segment of Info Edge. Well, the brokerage house is not expecting any kind of pickup in these segments and is also not factoring that in the 9,000 target price. And also from the other small startup investment that Info Edge has done, the brokerage house does not expect any kind of uptick or growth coming on from that investment. So all in all, just summarizing in 2 lines. Number 1, very much bullish on the core business Naukri, and number 2, Zomato and PB Fintech to aid growth.
Okay, Rucha, thank you for getting us that note on Info Edge. Raghvendra, your call on this particular company, Info Edge.
See, Info Edge, if you see, in the last 1 year, the stock has already gone up by more than 70%. So it has up too fast, and we believe it might cool off. In terms of the valuation metrics, if you see Agam, the P multiple is more than 150 times on the EPS. That's super expensive in terms of how any asset-light model or a platform-based business would trade. So we believe that even 7,800 is an expensive price. We would wait for at least 10% correction and the stock to come to levels of 6,000, which is where we would again review. But at this level, it's an avoid considering the expensive valuations.
All right, we leave it at that. Raghvendra, thank you so much for joining us and taking us through your views on the several stocks and themes that we wanted to discuss. With that, we are out of time on this edition of Hot Money, but lots more lined up on the other side. Stay tuned to NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Gautam Shah, founder of Goldilocks Premium Research, joins us. Gautam, hi, good morning. It's Amina joining in. It's so good to talk to you today after many, many months. But first up, what is the call on the Nifty? And Bank Nifty has also risen in the last couple of weeks, to all our reliefs, to all our heart's content in that sense. How would you play the Nifty and how would you play the Bank Nifty? Would you buy either of the indexes at current levels?
Good morning. I think as a technician, it's just been a classical bull market making higher tops and higher bottoms. We've had a lot of local and global developments, including what happened last night. But honestly, Indian markets have just stood strong all along. Support levels have worked all along. And I think you don't question such bull markets. You don't question liquidity. You don't question momentum. And I learned this in 2003, 2007, when the entire bull market was fueled by foreign liquidity. Obviously, everybody seems to be talking about the Fed rate cut that has happened. I think more than refueling the economy, it's actually refueling the markets. Because I think a lot of the positives were already in the price and we wanted some new development which the market can latch on to to move significantly higher. And I think with this development, it does seem as if a new momentum on the upside is building up. Any which way, I think the last 2.5 weeks have been extremely quiet. Honestly, the trade has not been in the Nifty or the major large caps. They've all been languishing. But if the index were to get past 25,600 on a closing basis, which I think is a very important resistance, I think that will open up another 3 to 5% on the upside. And I still feel that this is a stock-specific, theme-specific, sector-specific market. There is still a lot of money to be made. India VIX is very quiet. There is no real euphoria. I think with what has happened in the last 7 to 10 days, people are questioning this move a lot more than enjoying it. So I think keeping all of those factors in mind and looking at the charts, and with the comeback of the Bank Nifty clearly, and with global markets doing well, all of these factors put together talk about further upside, but not really in the index, maybe outside of the index.
Gautam, that's such an interesting point because yes, you are right. The most common verdict is that bahut ho gaya, it's too overvalued, let's get out of it. So I'm glad you're mentioning this. My question is, Gautam, if you indeed believe that the markets, and by markets I don't mean just the Nifty levels, but overall, if let's say the Nifty 500 is to stay stable or move higher, I heard you say the moves could happen outside of the index. Where are those pockets where you believe that people can still make money on the upside? Conversely, do tell us also, where is it that you also believe ke bahut ho gaya?
Well, I personally feel that first of all, on the Nifty, you can't talk about lofty targets, even for the Bank Nifty for that matter. In fact, Bank Nifty has really become a value stock in some sense. I mean, if you look at the valuation and the P ratios of the Bank Nifty and compare it with some of the large cap private names and the PSU names, I think it's value. It really offers great value. And that's probably the reason we've seen this comeback in the last 2 weeks. And with the Fed cut announcement, I just believe that this entire financial services space could do exceedingly well over the next 3 to 6 months. So housing finance companies, insurance companies, NBFCs, banks, I think that's really the big margin of safety trade that we have at this point of time. Some other pockets, that we continue to like would be pharma and IT. I know IT had a down day yesterday, but overall structurally we remain very, very bullish. And the two other spaces which I see are potential big winners over the next 3 to 6 months. First would be metals. I think we've seen an excellent comeback in the last 5 to 7 days. And with what's happened yesterday in the US, I just feel that the metals index is ready for a breakout past 9,600. Once that confirmation happens, we are looking at a 1,000-point move on the metals index. And chemicals, very quietly over the last 6 weeks, we've seen a nice rebound in all the top stocks. Look at the Deepak Nitrate, look at the Tirumalai Chemicals. Many of these names have done very well. So that's again a pocket that we like. And not to forget FMCG. ITC is quietly sustaining above 500, Godrej Consumer, Hindustan Unilever. So these are the pockets that we like. In the mid-cap space, you have to be very, very selective. Auto ancillary, paints as a space, selective infrastructure stocks, sugar, fertilizer. So these are some of the pockets that we like in the mid-cap, small-cap space.
So a lot of calls there, Gautam. Fantastic detail. Hi, Tamanna here, and as always, a pleasure to speak with you. I want to come back to a little more minutiae when it comes to the BFSI space. Are you liking NBFCs? Are you liking a Shriram, a Bajaj Finance? What about your private and public banks? Anything there that you're finding very, very attractive right now?
Well, I think we made this point a couple of months back that Bajaj Finance could potentially be the trade of the next 1 year. And I think if you look at it based on valuations, based on fundamentals, based on visibility, and based on the charts, I just believe at levels of 75, 76, 7,700, you can't go wrong. And I think it's one stock, that could deliver supernormal returns over the next 1.5 years. And not just Bajaj Finance, I think the entire NBFC space, we make a custom NBFC index at Goldilocks. That seems to have, confirmed a breakout in the last 1 week. And it's doing much better than the actual Bank Nifty. So I think NBFCs as a pocket, and with yesterday's Fed announcement, it only fuels the rally even more. And I think with RBI likely to follow suit, whenever over the next few weeks to few months, I think NBFC is a space to be in.
Gautam, you mentioned that you like metals. I was telling Neeraj this morning that LME inventory is at a record low as we see it. In metals, if you've got to play proxy to commodities, give me 2 or 3 metal stocks you would initiate fresh longs on at current prices. And the fact that money is limited, I wish we could go out and buy chemicals, banks, metals, all of it, right? But that one top stock or sector that you would bet the house on right now.
Well, in the metal space, I think the point that you make when I speak to people on the street and when I speak to a lot of managements, the commentary is that on the ground, it's not all that good. But then when you look at it on the charts, it's not so bad. I mean, you have JSW Steel at a lifetime high today, and some of the other stocks like a Hindalco or a Vedanta are all close to lifetime highs. And I think the sector has gone through a nice 3.5 months of consolidation, and it's preparing to break out. I think a lot of the current negatives are in the price, and the future positives will now get discounted over the next 4 to 8 weeks. So I think JSW Steel and JSPL for me are the top picks. But if you ask me of one dark horse in the metal space, I think it could be NALCO, National Aluminium, which has an incredible chart, very good fundamentals, extremely good sector tailwinds. I think that could be one of the bigger winners. So if you have to really allocate your capital wisely here, it has to be pharma, FMCG, metals and IT. And I would actually stay away from the past big winners, PSU, auto, capital goods, real estate. I would stay away from these 4 and commit into the other 4 which I mentioned.
Pharma, which is the one stock you're buying, I did hear you say ITC is one you like from the consumption space. In pharma, give me one stock that you would go out and buy right now. So
I think Dr. Reddy's is a very interesting setup.
So
I think Dr. Reddy's, Cipla and Sun Pharma. I would go with these 3.
Sun Pharma, ITC, NALCO, would that be the 5 top stocks you're recommending?
Yes, I would. And Bajaj Finance, not to forget that.
Yes, and Bajaj Finance.
Just Gautam, before we let you go, since we've seen the 25,600 mark on the Nifty and we started this conversation with a Nifty call from you, do you want to return to it?
Well, I think Nifty is not important anymore. Honestly, we keep talking about these numbers, but if we do get past 25,600, I think the next real stop on the upside is about 26,500. But that's 4% away from where we are right now. I think that as late Rakeshji used to always say that the trajectory is more important than the magnitude. And bull markets always top out on greed. And where is greed? I see concern, I see fear, I see questions that are being raised in today's bull market, and bull markets don't top out like this.
Gautam, we have a global guest waiting, but I'm tempted to ask you a 30-second answer if you can. Gold, you've been a big bull. You continue to be a bull on gold?
Absolutely. I think it will do the unthinkable even from current levels. And I think after what has happened last night, I do believe that gold is now ready for $3,000 gradually. And silver could potentially see a 30% rally even from these levels. And I maintain my view that gold and silver will beat equity benchmark returns over the next 6 to 12 months.
Quite a statement. So gold and silver might bleed equity benchmark returns. Gautam, we constrained for time today.
They already have, over the long term as well.
But bleed is, well, quite the statement, really. But Gautam, thank you. Very soon, Gautam, we should try and, ahead of the festive season, do a longer chat. Today, constrained for time, we'll have to thank you here, but thank you for taking the time out.
Thank you, Neeraj. Pleasure.
That's the view from Gautam Shah of Goldilocks. Enjoy the moment instead of complaining about the upticks. That's the view from Gautam Shah. Let's ask Harold van der Linden, a very important global voice. He's head of Asia Equity Strategy at HSBC. Joins us on this all-important day. Harold, great having you. Thanks for joining in. Do you reckon risk asset investors will have a chance to enjoy moments in the next 1 to 3 months post this Fed rate decision? Is this easing cycle going to be accompanied by upticks?
I think for the moment, yes. What you normally see is that the market has anticipated these rate cuts. And after the rate cuts, normally you have a couple of months of good performance as well. So if you say over the next 3 months, will risk assets do good? I suspect the answer is going to be yes. If you then go a little bit beyond that, say 6 to 12 months, then very often what we see is that markets are starting to come off because the very reason for the rate cuts is that things are slowing. And what we've seen in the past, doesn't have to happen this time around, but what we've seen in the past, that markets after 6, 7 or 8 months after the initial rate cuts start to drift lower again because worries about growth starting to come through. So we'll have to see over time if that's going to happen again this time. But for the next 3 months, I think this is positive for risk assets.
Harold, good morning. Great to speak with you. Just to get a sense of what is the view now on emerging markets like India. From the Indian perspective, the rate cut paradigm shift becomes very, very important to understand where global flows are going. What would be the view?
Yeah, so the view is that these rate cuts will be positive for emerging market assets. And we like risk. Emerging markets is more risky than developed markets, so that's good. And what you're going to see is that because it doesn't make as much sense now to keep money in money market deposits anymore in the US, you want to put money somewhere else. And equities and Asian equities will fit into that as well. In addition to that, what we also see is that appetite for the Japanese market is cooling. So you see that money is coming out of Japan. That doesn't have to go into Asia, could be going somewhere else as well, but that's something to keep in mind as well. So there are two sort of dynamics that is good for Asian markets. And then the question is, of course, will they go to India? Now, the funny thing is that for global fund managers, they're underweight on India. That's got nothing to do with their view on India that has been negative or so. On the contrary, most of them are positive. It's just that they feel uncomfortable with the high valuations, and the local investors have bought up that market, right? So they've pushed the foreign investors out. So the question is, will they come back?
Sorry, just the point on India, if I can just ask a quick follow-up. If not India, then where else? I understand the valuations are uncomfortable, but for global money seeking a destination, what then is the alternative?
Yeah, that's the real problem here. You're absolutely right, because let's go around the region. Japan, we see the yen strengthening is not good for equities. In Taiwan and to a lesser extent in Korea, the AI rally seems to fizzle out. So then you got, of course, India. China, the problem with China, of course, remains growth, and the appetite for China is not extremely high. So real good news got to come out of China in order to absorb their money, and that news is not there yet at this particular point in time. And then actually the other great story in the region is ASEAN, but ASEAN is small. So if we take that out of the equation, because it can't absorb the money that in India can, you're right, where else can it go? And that is the problem. That's, excuse me, that's exactly what you see in markets, that people struggle to buy more India because it's too expensive, but they are actually almost neutral in China because if you don't have much more in India, where else do you put that money? So you end up being neutral in China. That's right.
Harold, hi, it's also Samina joining in. And if you're buying India, and I know you've said this before, that India is where China was maybe 20 years ago. So the road ahead is looking very glorious for us. And everything seems to be coming together. You do like banks, from what I remember last. You also did say that while the balance sheets were strong, things could be slowing down. At the current juncture, with a rate cut in the US, an anticipated rate cut in India, which could help balance sheets for Indian banks, would you buy Indian banking names?
The short answer is yes. But I do see cracks starting to appear in the Indian story. We know the Indian story is great, GDP growth is great, and there's a lot of sort of formal retail takes market share for informal retail. I do see the first cracks to the Indian story appearing, but it's not something that is going to keep me awake at night, and also doesn't mean that I think that this is the time to exit that market or so. On the contrary. And those cracks appear in the banking system, to be honest, because you see that they struggle to keep the deposit because everybody's putting it in the stock market these days. So there's pressure on margins starting to come up, and delinquencies in some of the personal loans is picking up as well. But broadly speaking, you want to have banks or companies in general in India that have distribution capabilities. If there's one thing where India is unique as against China, you're right, a lot of things look like China 20 years ago, but where India is unique, you need to be able to distribute in India. That is one of the most difficult things to do. And banks and retailers and these sort of companies, they can. You get good distribution to a large part of the population that is growing and willing to spend more money on a mortgage or a car loan or maybe on cosmetics or something like that, then you're in a really good position in India.
Harold, would you tell investors sitting outside, including yourself, to add incremental capital to Indian markets right now? Or will you wait for a better time and opportunity, because the fear of missing out is also quite real for these markets?
Yeah. So basically what we tell people when it comes to India, you have to ignore the valuations for the moment. It is just, it is expensive, but the underlying momentum is good. And as you or your colleague just highlighted, what are the alternatives in the region? Where else do you really want to go? Yeah, Indonesia looks interesting. The Philippines look interesting. Those are smaller markets. Taiwan is struggling with AI. So that's a problem as well. So Korea is where people like to go. China is where some of them go, but it's really concentrated in a few stocks. And in India, you got a broader sectors, a broader selection of stocks where you can go to. It is expensive. We just have to digest that for the moment.
Harold, the question then therefore comes is how expensive can expensive become? Because some people argue that Nikkei, when it topped back in the last century, it topped at 60 times multiples. We are still at 22 times.
Yeah, that's right. I think you've got to be careful what you wish for, because it sounds great if you can go to 60, but remember that the Nikkei then fell for 25 years thereafter. So then you got 25 years of bad market performance, right? Listen, I think if you trade as a market on 20 times, but you can deliver also about 20% earnings growth, and this year and next year, and maybe the year thereafter, as long as that visibility is there, I'm happy with those higher valuations. If we see that that visibility starts to disappear, or earnings disappointments come through, or we see that banks or certain consumer companies start to struggle with their businesses for whatever reason that may be, or we see other excesses in the market of people taking way too much loans to put it into the stock market, which is something you got to be always really careful to do so, then I think you're getting to a situation whereby, hey, we got to be really careful here. That's exactly what happened in Japan. In 1987, 88, 89, the market was boom, 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 going up like in India. But eventually, when it started to come down, a lot of things started to work in a negative reaction, right? People had used stock as a way to borrow some more money. And if the stock goes down, well, then you have to repay your money suddenly. So you got to sell even more stock to repay that money. And then the negative, the dynamics move into an opposite direction. Now, we're not there yet in India, and I hope we don't really get there. What you want is good growth, steady growth, visible growth, and a steady pickup in these markets.
By no means was I wishing for that 60 times, just making a point, trying to get a view.
I get your point.
Harold, we keep talking about this and we keep worrying about how China is doing, and the fact remains that metals are reeling under pressure no matter what happens to the dollar, and you may see that weaker currency, positive commodities, all that play out. Fact remains, demand on ground is a huge problem. Do you not worry that this will play catch up?
That is a problem. We know it's a problem, and that's one of the reasons why demand for certain particular materials continues to be weak. China has got a growth issue, and that comes from the real estate market. The funny thing is, in China, in Hong Kong and Singapore, just to give you an idea, and in China, onshore China is the same, but in Hong Kong and Singapore itself is almost 2 trillion, and that's with a T, trillion US dollars. Stand on the side. People hold it because they do not feel they can invest yet in China. The amount of money onshore in China that is held in deposits, where they cut a deposit rate in China gives you maybe 2.5% these days or something like that. But they keep enormous amounts of cash on there because they feel uncomfortable investing. It's exactly the opposite of what's happening in India at the moment. We need to see a catalyst for that money to be employed.
Okay.
I don't know what that catalyst could be, but there's a couple of things that could help. But at the moment, that's just clearly not the case.
Okay. Harold, just one final question. And this is about whenever you have good news, euphoria, excitement, we're definitely seeing that in Indian markets right now and globally as well. Then come those who are saying that there's going to be a big downfall. They're pulling out historical data, what happened in 2007. Just wondering if you're looking at any of that historical data at all, and are you buying into this sense of foreboding, or is it that people just don't want to enjoy what they're seeing?
No, I do look at the history a lot. I teach a class about it at a university in Hong Kong. But I think you got to also understand, for us to look at markets, we try to understand history in order to understand how things worked in the past, but it doesn't mean that's going to happen in the future. So we need to look at India equities on its own merits. Is growth good? Yes, it is good. Is it visible for the next 1 or 2 or 3 years? That means, are the underlying trends very easily identifiable and understandable? Yes, it is. Are the valuations excessive? Well, compared to the region, yes, but it's not, as your colleague just mentioned, it's nowhere close to where Japan was. So as long as these fundamentals are in place, this can continue. It's easy to call for a downturn because as long as you call at some point in time, you'll be right. But I think that's the wrong attitude at the moment yet. Yes, there are cracks appearing, but it's not something I would say, hey, it's time to take money out of the market. So far, India looks good.
That was HSBC's Harold van der Lind talking about his views on India and what he makes of the Fed meet outcome. Let's shift focus to the markets at the moment, and what we're seeing is, well, largely consolidation. After the initial weakness that has set in as far as the markets are concerned, well, we are now looking at a little bit of sideways movement, but that's not to say that the final hour of trade will be very important, also crucial, and can't necessarily rule out volatility there as well, considering it is the weekly options expiry for the Nifty 50. But we move on to NTPC, which is also buzzing in trade, and in fact, one of the few advancers on the index today, even as it announces that its subsidiary, NTPC Green Energy, will, or rather has filed for an IPO. Mihika now joins us to give us more details on this one. Mihika, over to you.
NTPC is buzzing in trade because its renewable energy arm, NTPC Green Energy, has filed for its IPO yesterday, and the company will be raising 10,000 crore via an initial public offering, which will only consist of a fresh issue, and majority of the proceeds will be used for debt repayment and general corporate purposes. Now, when you talk about the valuations of the companies, well, let's first start with the listed peers. The company has two listed peers. One is Adani Green Energy and Renew Energy Global. When you look at the EV to EBITDA multiples of these companies, Adani Green trades at a 50.9 EV to EBITDA multiple, and Renew Energy Global at 13.73. So when you take the average of these two, it comes to 32. And when you talk about the potential financials in FY25 for NTPC Green Energy, well, Q1, the company made around 650 crores of revenue. So based on this run rate, it could see revenues of around 2,600 in FY25 and a 2,300 crore EBITDA in FY25 if it maintains its FY24 margins of 88%. So when you talk about the potential market capitalization, it could stand around 75,000 crores because taking the consideration of the 32 EV to EBITDA multiple with the FY25 estimated EBITDA. And this could lead to a potential equity dilution of around 13% equity, which comes up to around 100 crore equity shares. The company has a total outstanding share capital of 750 crore equity shares.
All right, Nika. Well, with that, it's a wrap on this show, but stay tuned to NDTV Profit for more news and updates.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे, वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है, आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए।
Hello and welcome. You're watching Market IQ. I'm Vishwanath Nair. We'll get you the top news of the hour. But first, let's see what markets are doing right now. Harsh is joining in with all the action. Harsh, take it away.
Well, a 0.25% higher on the Nifty 50, certainly at least the benchmark doing well, but overall you're seeing weakness in broader markets, and let's pull up the breadth, and that's indicative of exactly where the pain seems to lie. The mid cap and the small caps is where all the pain currently is. The Nifty 50 relatively doing better in that sense. Let's pull up again the breadth of the market, see what the advanced decline ratio is really looking like. And even within the Nifty 50, you're seeing stocks like NTPC do very well. You're seeing HDFC Bank lead in terms of contributories. You're seeing good traction on the private banking side of things. There you go, the advanced decline 4:1. So clearly the breadth of the market extremely weak, skewed towards the bears. 3% plus on NTPC, HDFC Bank 1% plus, contributors showing Bharti as well contributing well, along with ICICI chipping on to gains, TCS, L&T, Infi. So the IT pack really dragging the index along with PSU banks. It's fascinating. The PSU banking space seeing weakness, while the private banking space really supporting the index, both the banking index as well as the Nifty 50. Let's quickly take it to some action on the broader end of the spectrum. The Nifty 250 is down 1.5% in trade, so clearly pain felt there. Even the Nifty mid cap is seeing around 1.2% odd in terms of a decline. You're seeing good traction, of course, within banks. We spoke about that. Let's pull up the Nifty Bank around 0.5% higher, but the Nifty Auto also supporting well along with FMCG. So some pockets of support, unlike yesterday. Today we're seeing some of those pockets showing more support, both auto as well as FMCG. What's not doing well? Well, pretty much everything else. You're seeing metals down around 0.8%. The Nifty PSU Bank down 1% plus, including Nifty Realty also down 1% plus. So overall, you're seeing a weakish market on the broader end of the spectrum, while the index, the Nifty 50, doing fairly well.
All right, Harsh, thank you so much for that market update. Now, one of the key triggers from overnight was that of the Fed action. The Federal Reserve has delivered on the much anticipated 50 basis points rate cut and has brought the range to about 4.75 to 5%. This is the first rate cut in over 4 years. The decision was not unanimous, however, with one member choosing to vote for a lower rate cut of about 25 basis points. The Fed chair stressed that the central bank will not follow a preset course and will evaluate data to make sure that the future decisions are in line. The FOMC, of course, has raised the unemployment expectations to 4.4%. from 4% earlier, and has revised the inflation outlook downward to 2.3% from 2.6%. We spoke to a host of market experts on what the rate cut means for the emerging markets like India. Let's listen in to what they had to say.
What you're going to see is emerging market rate cutting cycles broadening and picking up steam again. And so we're looking for many of these EMs to see scope to start cutting rates again without having to worry about those factors with the exchange rate and flows. And that includes EMs in Asia, where rate cuts have not really gotten started. But I think now that the Fed has started to move, that will open up scope for those economies to ease as well. So I think the Fed's move for EM means that some of those rate cutting cycles can start up again, and new rate cutting cycles can start as well.
It may not find its way immediately, right? There's going to be a recalibration based on what the Fed has just done, what the Fed's going to do, how that's going to impact the dollar, and then how it's going to impact the EM markets, right? The emerging markets, whether it's India, whether it's the other EM countries, and what they do with their rates. And so I think we're going to have to watch and see how that happens. I don't think it's going to happen quickly or immediately. And to your point, a weaker dollar is going to make your products more expensive. And so therefore, if they don't bring that in line, then that differential is going to stick way out. Is going to be probably a hindrance or a headwind to new money coming in. But if India and the other EM nations come down, they start to keep the differential the same, and so therefore there doesn't end up being a big difference. Then I think yes, there's more of a possibility that opportunity and money will come into places like India, which are very, very hot and actually very exciting at the moment in terms of opportunity and what's going on there in your markets, in your sectors.
If you go back all the way to Paul Volcker, and if you see the kind of economy and the interest rate environment that was there until now, any quote-unquote recession that has been Fed-led, and this is what the Fed is trying to do, it's trying to cool down the economy by raising rates, has been very shallow and short-lived. So I don't think people are going to be too fussed about this entire rate cut cycle in the US. The only thing is, what could it mean for India? My sense is this will put a little bit of pressure on the Reserve Bank of India. I think they'll have to move their stance to neutral in the next meeting that they have. And we were forecasting our first rate cut in India in February of next year. That may get probably advanced to maybe December's meeting this year. So I think all things considered, even that we're expecting just about a 25 basis point. But I think the market will digest this and move on. Like I said, I think it's a culmination of sort of maybe being a little behind the curve and probably not being able to do another one before the election. So I think all things considered, we're okay.
Right. So those are the market experts talking about the Fed rate action, of course. Now on to the top story. Then the Supreme Court earlier today rejected telecom operators' plea seeking a recomputation of the adjusted gross revenues. Remember that Vodafone Idea, Bharti Airtel and various other telecommunication companies had filed curative pleas against the 2019 Supreme Court verdict in this case. Now Varun Gakar joins in with more details. Varun.
That's right. In a big blow to the telcos, the Supreme Court has rejected the curative plea that was filed by these telcos back in 2023, which sort of limited reconsideration of the top court verdict, which came out in 2019, which held that these telecom companies have to include the non-core revenues to calculate these adjusted gross revenues. Now, what is AGR? As in, what is adjusted gross revenue? This is a basis for revenue sharing mechanism between the government and the telecom operators. Now, under this mechanism, the operators have to pay a certain licensing fee and a spectrum usage fee to the Department of Telecommunications. And how the Department of Telecommunications calculates this fees is by taking a percentage of the AGR. However, what constituted a definition of AGR was in dispute since 2005. In October 2019, however, the Supreme Court ruled that non-core revenues must be included while calculating the AGR dues, ending a 14-year-old long battle between the Department of Telecommunications and the telecom companies. Now, this 2019 judgment dealt a crippling blow to the bruised industry, and telcos such as Vodafone Idea and Bharti Airtel stared at dues worth more than 1 lakh crore. Now the Supreme Court has rejected the curative plea, and as of now, no other recourse remains for these telecom companies, and it is the final nail in the coffin for these companies.
All right, Varun, thank you so much for those updates. Now, this will hurt almost all of the telcos in India, and how and which one will be the worst hit of all? Now, Rucha Somaya joins us on that. Rucha, why don't you tell us what exactly this means?
Thank you. So as Varun also rightly mentioned, I'll just reiterate that and dive deep into what are AGR dues. Like AGR dues are the dues which are paid by the telecom companies to the government in return of using the spectrum. Now, government used to calculate this kind of dues on the total revenue, which includes telecom as well as the non-telecom revenue. But the telecom companies, if we can move to the slide wherein we are explaining about where the telecom companies said that only revenue from telecom should be considered for calculating this kind of dues, and the non-telecom revenue should be excluded for this kind of dues. But the Supreme Court today has rejected this plea filed by the telecom companies. But let's have a look at what is the quantum of the dues which are payable by these companies. Well, Vodafone Idea has dues of about 70,300 crore, but has the cash balance of only 535 crore. Bharti Airtel has about 44,000 crore, and Reliance Jio largely doesn't have any kind of dues. But as I spoke about cash, Vodafone having 535 crore of cash, Bharti Airtel has about 16,340 crore of cash. Now, looking at the asset liability of these companies, clearly Bharti Airtel is at a better position than Vodafone Idea because it has more cash and less dues versus Vodafone Idea. But moving to a deeper dive into the kind of timeline around these AGR dues, well, back in 2005 and 6, government had decided about the AGR, and this naturally upset the telecom companies, and these telecom companies filed a plea to request the government to revisit its decision in 2019. The verdict again went against the telecom companies. Well, this happened again in 2020, 2021 as well. But the latest plea, that is in October 23, which was filed by the telecom companies, got rejected again by the Supreme Court today. So, well, the big companies, Vodafone Idea, Bharti Airtel, will now have to pay the dues back to the government. But Bharti Airtel seems to be standing at a better position than Vodafone Idea based on the cash that it has on its balance sheet.
All right, thanks for that update, Rucha. Now, shifting focus to some more tragic news that is coming in. A 26-year-old chartered accountant from Kerala died 4 months later into a job at EY. Anna Sebastian Perel was working for EY at their Pune office and had joined the workforce on March 18th. She had an untimely death due to cardiac arrest in July. Her mother, in a letter to the EY chairman, has expressed the horrors of working for a toxic workplace that was the reason for her daughter's death. In her heartbreaking letter, she also claimed that no one from EY attended the funeral. EY's response on her death has invited severe criticism on social media. The incident, of course, highlights the dangers of working for workplaces and cultures in India where there is extreme pressure on employees. Now, we are taking you through some of the big questions that need to be asked in this current case. And that is, firstly, is it time to review toxic work culture in the Big Four? The second question that we're raising is why EY reacted so late? Remember that Anna died in July and the responses from EY are coming now in September. Now, one can respect the work culture, but does the culture actually respect you? And lessons for managers on maintaining a healthy work environment is also an important question. To discuss this and more, I'm joined by Arun Giri, co-founder and group editor at Tax Sutra. Arun, welcome to this conversation. Let me, take you through some of the questions that we had raised. Firstly, is it time to look at work culture at these large consultancy firms? Because this is not probably an isolated incident. This is common knowledge, I'm assuming.
I've tracked the Big Four for 20 years as a journalist, and before that I finished my CA. So I can talk possibly from both the viewpoints as a little bit of an unbiased observer. To me, the bigger issue, which so far has not been discussed, seems to be the obsession with the top line that the bigger firms have now gotten into. There is a complete obsession about revenue. The focus is on top line, profits. And if you look at what the CA profession started out as in 1949, when the Chartered Accountants Act came into being, we always said CA is a profession. In the last 10-15 years, there's been a tension between two schools of thought. One, whether CA is a profession or whether it's a business. And that, I think, has now been decisively resolved in favor of it being a business. And therefore, what you're seeing. Now, look at 20 years back, what was the top line of the Big Four firms in the country? Around 700 to 1,000 crores. And today, what is the top line? It's around 30,000 crores, if not more, in India. So you are clearly seeing that there is a huge focus on top line. There is a big focus on growth, big focus on scaling up. And therefore, if you have that sort of pressure at the top, it percolates down to the last employee. So I would say that if for a moment, if we look at the larger picture, to me, it seems that the focus and the obsessive focus on top line is one of the big changes that I have seen in the CA profession and in the larger firms over the last 10 to 15 years.
Right, Arun. So tell us also, take us through some of the specifics here. Audit as a function demands a lot of attention, a lot of work, and potentially a lot of hours from chartered accountants who are part of that group. So do you see that maybe there is a need to relook at how exactly we see audit as function at all?
Audit is pressure. Because unlike tax, where the compliance season comes in September, October, November, the 2-3 months in a year when you have to file the returns, when you have to do the tax audit or the transfer pricing audit, here in audit, you have a quarterly pressure. You have the limited review, you have the annual audit. Therefore, the pressure is much more. Plus the regulatory glare, if anything goes wrong in an audit, because it's filed with stock exchanges, SEBI reviews it, and so on and so forth. So yes, the pressure in audit possibly is much more, and it's also becoming more difficult to attract talent in audit because of the glare of the regulator. It's not easy now to attract talent in audit for even the larger firms. But there is one point, Vishwanathan, if I could bring it here, and which again has been missed out, I believe, in this entire debate. And it will be a good moment for us to even address this point. The fact that the CA profession, the audit, tax, advisory profession has become an oligopoly. It's a fact that the Big Four, the Big Six, whatever you may call them, today have a dominant market share. And that has to be addressed. And that has to be addressed, I don't think, by the regulator. I believe in a free market. It has to be addressed by the other firms. You have 96,000 CA firms in this country. If the top 4 or 6 firms are cornering 70 or 80% of the market share in terms of the revenue or the top line, then I think there is a structural problem. Now, because you have a concentration of work with the top 5 or 6 firms, you therefore have a beeline towards these firms. They are the ones who are paying well. They are the ones, the younger chartered accountants believe that to understand their aspirations in terms of finances. and therefore a lot of the young chartered accountants make a beeline towards the bigger firms, the big four, the big six, whatever you may want to call them. Unless this oligopoly is addressed, you will still have a lot of the issues that are connected to an oligopoly. Where do the chartered accountants go? Today, the big four is paying you almost twice as much as another firm can pay, as what I can pay. We employ maybe 70 to 80 people, but it's difficult to match the pay that a big four gives.
Arun, the other question that I had was with regard to the nature of the workplace in itself, right? So there is a pressure that is coming top down on all members, and unfortunately, the way that the system exists, the people at the lower most in this entire hierarchy, they seem to be bearing the brunt of this entire pressure. Is this a good time to maybe also look at managers and the way that they assign work and the way they deal with younger CAs in this country?
Here, if I could make maybe a little bit of something contrarian, that
sure.
Big Four 20 years back had some 40, 50 partners. Today they have 600 partners. Now, it's very difficult for any firm to control a culture with 600 partners. A 600 partner with more, say, some 2 or 3 directors, then 4 or 5 senior managers, then some 8 or 9 managers, and then assistant managers, so on and so forth. I think some of this culture also is partner-driven. And this is where I think a lot of training needs to happen. At the partner level, you see in the US where even CEOs of firms like Google have coaching, have individual coaching. I think a lot of the partners in the bigger setup, all of them need a lot more training, a lot more coaching, individual coaching on how to take care of their team. I think it's a must. It's an absolute must. This has to be addressed at a partner level. Will be difficult to address at an organization level with 500 to 600 partners. I think some of the big fours have already crossed 600 partners. 600, 800 partners if you have. Then to say that we can control the culture, because each partner is operating a P&L. Each partner is expected to bring in work in multiples of the money that he earns from the firm. So therefore, you have to look at a partner level, at a partner level approach rather than an organizational level approach alone.
Arun, the last question that I wanted to ask off of you, there is this debate of excessive work pressure leading to severe health issues, and then of course in this particular case the allegation is that the death was caused by excessive work pressure. I just wanted to get your opinion, because at the end of the day, chartered accountancy as a profession is also a high-pressure job. I mean, irrespective of the kind of work pressure that may come from the company, the job itself is a high-pressure role. Should we, as potential managers and potential employers, just completely, rethink the way that we put pressure on youngsters?
We should rethink, but we won't. That's the fact. In India, we always have short memories. I'm at heart an election analyst, and I've always maintained that voters are forgiving in this country. So after 1 month, we'll be talking about something else. So we will not, but we should. Should we rethink the sort of pressure that we put? We absolutely should. But I also strongly believe that some of this culture is set right from the top. I think unless in all these bigger firms, not just the big four, unless the culture changes at the top, I don't think there is much scope for change at the bottom level or at the manager level. You can't expect a change of culture starting from the manager level. This has to be driven right from the top, Vishwanathan. That's what I think. Do we need a change in culture? Do we need to rethink about the work pressure? Absolutely, yes. And I think somewhere there is a clear disconnect about the way the partners or the managers understand the Gen Z. The Gen Z is very, very different. Many of them have joined the workforce post-COVID. The aspirations are different. And I think there is a clear disconnect, a clear lack of understanding of what the Gen Z generation, that this generation is looking for. I think at all levels, including us, including me, I think we need to make a lot more effort to understand what this generation, what the youngster of today is looking for.
Sure, Arun, thank you so much for joining us on this conversation and taking us through what your thoughts are in this matter. Arun Giri from Tax Sutra. Thank you so much. Now let's get you an exclusive conversation with Titan's CK Venkatraman, who talks about the expansion plans at Titan. My colleague Mahima has joined in at an event.
I think the joy of shopping in a store is getting stronger and stronger, and even in the smallest of towns where we are setting up stores, we're finding that people are really loving that, and I think that's having a cascading effect across all categories.
Absolutely. And when you're talking about store expansion, we're seeing a lot of competition around. So how is that playing up?
So both in our own categories as well as every other category, I think the organizing of every industry is happening,
right,
because I think the customer experience is given mostly through that kind of a professionalizing of the network of the stores and all that. And even the local players, the regional players in every category are actually totally sprucing up their customer value proposition, and that's what we are seeing on the ground.
Right. So, like you rightly mentioned, when it comes to the retail segment, there's a lot of competition still which comes from the unorganized space. So, do you think that, over a period of time, it is vanishing, one thing? Not vanishing per se, but it is reducing for sure. And from a longer term perspective, where do you see that, going? Do you think that the organized players eventually, let's say 10 years down the line, will take over the unorganized place?
I think maybe even the definition of organized versus unorganized, we may need to sort of think about. What I mean by that is that there are, for example, if I were to take jewelry, there are independent jewelers who are a single city based, who you may end up calling as organized, but they are actually, they're quite, you may end up calling them unorganized, because they're not part of a national chain or a regional chain, but they're very professional in their overall customer value proposition. So I do feel, depending on the industry, all ethnic categories, if I were to take food retail, jewelry, ethnic Indian wear for women, so these are local in nature. These can become very organized, but still remain local in ownership, or at state level, for example, need not be dominated by national chains. Whereas product categories which are pan-India in nature, I think the scale advantages of a national player will start to play. But overall organizing is happening because the customers are wanting a certain minimum standard in the shopping experience.
All right, that was CK Venkatraman, Managing Director at Titan. On that note, it's a wrap, but as part of the Samarth by Hyundai initiative, in partnership with NDTV, we bring to you stories of people who prove that disabilities do not define what they can or cannot do. Preeti Srinivasan is one such person. An accident paralyzed her at the age of 18. She went on to become India's first PhD scholar with 90% disability. Thanks for watching. Stay tuned to NDTV Profit.
At the age of 8, I became the youngest person to join the Tamil Nadu senior women's cricket team. At the age of 18, after a split-second accident, I found myself totally paralyzed below the neck. It was extremely difficult for me to understand how to live in this new body. Then I decided I could not afford to be afraid anymore. Everybody deserves a chance at dignity. Everybody deserves to set their souls free and live a full life. And that's when Soul Free was born. The Soul Free Inspire Center is using a completely unique and experiential framework for treatment. We have a multi-pronged approach, and we use arts and music and dance to ensure that people want to live again. I want to do whatever I can that is good for the planet. I want to spread love, laughter, and light in the universe. I am Samarth. I'm transforming lives and creating many more Samarth.
फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy
Welcome. You're watching the Mutual Fund Show. I'm Tamanna Inamdar. This is your one-stop destination for all things mutual funds and your investments. Now, the topic we're taking today is one which I think is the talk of the entire equity space, which is IPOs. There have been a whole host of IPOs coming in, more lined up in the future, and a lot of mutual fund investors are possibly even applying for IPOs in their individual capacity. But that's not what we're focusing on right now. We're talking about mutual funds and their growing participation in IPOs. How do you know if you are getting the best of the primary market through your mutual fund investment? In fact, do you have a better chance of getting a slice of the pie through a mutual fund rather than individually applying? Because think of it this way, with record SIP inflows, mutual funds also need more destinations for that money. And they have invested over 6,900 crores in 8 IPOs this August alone. Let me repeat that. 6,900 crore rupees in 8 IPOs this August alone, making it the largest primary market fundraising since May 2022. From major anchor investments in Brainbees Solutions, Ola Electric, and Premier Energies. We'll explore what that means for investors and the mutual fund landscape. Of course, we don't have the figures for Bajaj Housing Finance, but that would be interesting to see as well. I'm speaking today with Aditya Nain, author, professor and creator, and Santosh Joseph, founder, Germinate Investor Services, for more on this. Welcome to both of you and great to have you on the show. Aditya, let me begin with you. And first of all, let's get back to the basics. Is it a good idea for mutual funds to look at primary issues and the primary market?
Tamanna, thanks for having me on the show. Firstly, I guess why not, right? Because look, if you're going to invest in an IPO, you'd rather do it through a mutual fund than as an individual, because I think they have a clear game plan as to why they're investing in the IPO. Are they investing in it for, quick listing gains, which would usually not be the case, or are they investing it for long-term capital appreciation? Which means they've done their due diligence, they've done their research on the stock. And as India's equity markets increase, retail participation does increase. Mutual funds, as you said, are going to look for various avenues to park that money, especially at a late stage of the bull market that we probably are in today. The market is flooded with IPOs because, this is the time of the market when IPOs do well. Lots of money flushing around, and so they need a home to find for themselves.
I'll tell you why I'm asking that question, Aditya. And yes, of course, why not is a fair enough answer, but I'm asking it from this point of view, and I'll take it to Santosh as well, that a lot of experts, financial advisors say that IPOs are not the best investment. Let the stock list, see how it's doing, come to a fair value, and then enter. That's when they're addressing individual investors. Won't the same stand for mutual funds?
Yeah, so I think with mutual funds, the added advantage that they have is their portfolio sizing is a lot more deliberate than retail investors. So, a fund is not going to put 50% or 30% of their assets in an IPO. They're going to put a small amount in any case, because look, IPOs are small cap companies at the end of the day because they're new. So a large, let's say, flexi cap is not going to have that much allocation to mid or small cap in any case. And from that mid or small cap allocation, they're not going to have that much to recently listed IPOs further. So I think that takes care of the issues. Of course, this also depends on the management style of the fund, right? Some management styles or managers are a lot more conservative. They'll take the Warren Buffett approach that let the stock find its price, which makes sense. As a reason, I don't invest personally in IPOs. But I feel a lot more comfortable if there's a management team that's actually taking the decision. And so I don't feel it's a no-no on the mutual fund side.
Santosh, let me come to you on that point. And before we get into, how to maximize your mutual fund investment if you want to tap the primary market as well, and we'll get to that in a bit. But at the core of it, because mutual funds have been very significant participants in the primary market as well. Sometimes those bets work, sometimes they don't. And at the end of the day, they're custodians of investors' money. Do you think that there's a bit of exuberance in the way mutual funds are also participating in primary issues? Santosh, that question's for you. Yeah.
I think the markets generally are exuberant right now. Now, whether we talk about IPO valuations being high or even the regular secondary market, the IPOs valuations being high, irrespective of the IPO pricing, I think for the mutual fund, the most important aspect is they have to consider the supply that's coming into the market for businesses, whether they are traditional businesses or new age businesses, whether the business is raising capital by offer for sale, or they're raising capital because they want to grow the business, or the promoter selling stake. The question of exuberance comes in is when you feel that everything is expensive, both the IPO and the non-IPO, and then you do not know where to deploy the money. But here, there are also new age businesses that do not exist already come into play. And therefore, in the month of August, when you saw this data, both for IPOs and the monies that went into IPOs from mutual fund, there were also these new age businesses which we do not have essentially a great reference point for. They are businesses which are highly scalable, highly profitable, away from the regular businesses that are already available. So using the mutual fund vehicle for regular investors to participate in them is a great idea. And I don't think one can just look at it as exuberance. And I think we also have to understand that, mutual funds participating in IPOs is better off for retail investors, at least to choose which one to participate and which one not to. And I think another point that we can add is that a regular retail investor is better positioned through a mutual fund to get some allotment into the scheme, then they're trying their luck, because today winning an IPO allotment is more difficult than even winning the lottery.
Yeah, okay. So that may improve your chances, definitely. Now, let's look at it this way, Santosh. If you want to make the best of primary market, and a lot of exciting IPOs are lined up as well for the rest of the year, how can you maximize that through your mutual fund investments? Obviously, you'll apply for those issues if you wish to. All of that is on one side. I'm not talking about that. But in terms of mutual funds as a vehicle, how best to maximize it?
So mutual funds have actually been extremely efficient already in terms of maximizing on the opportunities as far as IPO participation by mutual funds, and therefore giving the end retail investor that exposure. Now, the quality of fund that you select, either thematic or sectoral or larger diversified funds, will actually depend on whether that scheme will even apply. Now, today, you have funds which have even dedicated mandates to say, I will invest in the IPO markets either during IPO or immediately after IPO. Again, then when you look at a lot of small cap and mid cap funds, in fact, most of the IPOs that happen, you'll notice, are small cap and mid cap funds. They have the ability to aggressively participate and sometimes even get the allotments done in the qualified segment part. So choosing a fund which you feel is most likely going to participate in IPOs is going to benefit the investors, going to benefit the scheme objective of what scheme wants to generate. The bottom line is, we have to consider the IPOs that are there and the scheme that you're investing. If the mix goes well for in both the cases, then the investors benefited. And we believe that mutual funds will take a better decision than the retail investors themselves.
Okay, so that comes back to the question. And let me come. So which funds? Which funds? If someone's watching right now, Santosh, and they want to know how do I make the most of it, then give them something a little more specific. Which funds should they look at?
Specifically, you already have Edelweiss now for almost 4 or 5 years running a fund earlier called the IPO Opportunities Fund, and now it's called the recently listed IPO Opportunities Fund. Otherwise, I think there is no specific fund that is available. You have to just play by the mid cap or the large cap or even the theme, because when you look at the month of August, you have a lot of funds which were in the new age and in the technology space. So therefore, a digital fund or a technology fund was more suited to take advantage in the month of August than any other traditional fund. So I think that's why you'll notice that most AMCs are now coming out with new age funds like digital fund or technology fund, because the entire universe of what we call tech and tech-oriented IPOs are increasing by the day.
Okay, I'll take that question to you, Aditya. Are mutual funds a good vehicle to maximize allocation, especially in big blockbuster IPOs? And like Santosh said, sometimes it's like winning a lottery. So you try and win that lottery, but you maximize your chances. How do you do it?
So I think the Edelweiss recently listed fund, and as far as I know, there's no competitor to that. I may be wrong. It would be your best bet. It could work well for like a core and satellite portfolio where someone has, let's say, index funds or flexicap funds as their core, but they want to play around a little bit with a small portion of their portfolio. They could try something like, the recently listed fund. However, I did take a look at the numbers earlier, and when you compare that performance, which is the fund essentially is about 50% mid, 50% small cap at this stage. When you compare the performance to just any mid cap or small cap fund, even from the same fund house, it doesn't really give you that much of an advantage. So I would rather stay away from it. But if you really want to go for the IPO play, I think that's your best bet. Apart from the technology funds.
Which technology funds? Or should
a couple of them.
Yeah, should you choose depending on the IPO? So, for example, if I'm an investor and I want to make sure that I have an allotment in say Swiggy, NSE, Hyundai, these are some of the big ones coming. How do you position yourself?
You don't have that much choice even in the digital or the technology thematic space. You do have, let's say, the Tata Digital Fund, the ICICI Technology Fund, and a couple of others more. I mean, and quite a few of them are coming up. You've had some NFOs in this space as well. I don't think you can say beforehand that, hey, I want to go with this fund to get the most advantage because, let's face it, the equity market is still growing. We're not in a space where we can say right now, this fund is going to invest in all the upcoming tech focused IPOs. So you may have fund managers taking discretionary decisions about which ones to skip over and which ones to go for, which is why, maybe we'll have more thematic IPO funds coming up, just like we have the Edelweiss one.
Okay, so there's an Edelweiss fund which caters to IPOs, but Aditya makes a good point. Comparative return doesn't show anything massive coming there. I suppose just wait and watch. Actively managed funds with a good history of astute fund managers is probably your best bet, because if there's an opportunity, they'll make sure that they are there. All right, let's get to your queries for the day, and the number on your screen if you want to write in to us. Remember, this is the part of the show where we get your questions and our experts answer them for you. Shirdi Nath writes in fast. He's 25, says he's been investing through SIPs for 3 months. The portfolio consists of 75% in equity and 25% in debt and gold. He's seen around 2% returns as of now. I suppose that's overall. Is it feasible to continue the SIP? Now, it's just for 3 months, so a little more patience perhaps expected. But Santosh, let me come to you first with that question. 2% return in 3 months.
No, I think we should not even think about the 2% or whatnot in terms of returns. Yeah. The good part for Shirdi Nath is SIP is going on. The asset allocation is fairly good between equity, considering the age of the person. It almost looks like, the 75-25 rule is being maintained between gold and fixed income as well as equities. Straightforward answer is please continue the good job that you've started off on. I think that 3 months should be well looked after 3 years or maybe 5 years or 10 years. And then you will realize that these returns of 2% won't matter. You may be sitting at far better returns than this. The success in an SIP is to stay as long as possible and maintain your asset allocation mix depending on your age and risk profile. But otherwise, nothing to debate or review this, just continue.
Okay. Nothing to debate and review, just continue. Aditya, would you agree? First of all, the 75-25 split makes sense to you?
Yes, it does. I mean, I'm not averse to that, but someone 25 years old, I'm usually biased towards an all equity portfolio. My motto for that age group would be just keep plowing as much equity in, especially if it's an SIP, because over the long term, that's probably going to outpace the other asset classes. But, 75-25 is a good allocation. It's 2% up today. It could be 5% down tomorrow. Just turn off that app, check it maybe twice a month. And a couple of months is nothing. I know, I really feel for new SIP investors because they want to see quick returns. But the name of the game for you right now at age 25 is to accumulate as much as possible. So instead of stopping an SIP, you're thinking about changing it, just increase the amounts that you put in fact, whenever possible.
Okay. Rahul writes into us, aged 20. Great to have so many people starting out with their SIPs and see so many young investors starting with their SIPs. That's just fantastic. Anyway, he has started with a Nifty 50 index fund, then shifted to a Nifty Next 50, and now I'm thinking about Nifty 500 Momentum 50 index fund, which is the best for a 40-year investment horizon. All right, interesting question there. Aditya, I'll let you tackle it first.
Wow, 40 years starting at age 20. That's great. I wish I had done that.
Yeah, I mean, I'd really just a second for 3 cheers for Rahul, who has a 40-year outlook at age 20.
That's amazing. I mean, something to be said for foresight. Okay, so let me defer back to asset allocation a little bit. If you have a multi-fund portfolio, Rahul, and you're looking for a large cap allocation, I would go for a plain vanilla Nifty 50. If on the other hand, you're looking for a, all-in-one fund, then I'd go to something that involves the Nifty 500. I'd actually just prefer the Nifty 500, plain index fund. But if you're going for the momentum fund, that's fine. If it's a one fund portfolio, I'd go for the 500 momentum. Otherwise, I'd go for the Nifty 50.
Okay, so Nifty 50 is your choice. Santosh, what would be your advice?
I think I would say that we are actually spoiled for choice in terms of where you want to do an SIP. For long we believed that Nifty 50 was a great way of investing and forgetting about it, especially when you have a 40-year horizon. Nifty Next 50 made it even better by giving you a little bit of the mid-cap exposure. But the cream right now is the Nifty 500. I agree with Aditya. The classic Nifty 500 itself is phenomenal, where about 75% is in large cap, the balance 25% is mid and small. Now, when you go to Nifty 50 momentum, the data that we have for the last 19 years is just too staggering. And if you can continue for 40 years, I am really, overjoyed for what Rahul may get, because the Nifty 50, Momentum 50 for Nifty 500 has delivered almost 1.5 times Nifty's performance. In fact, if I take the Nifty 500 Momentum 50 or the 19-year period of data that we have, against a 14-15% of Nifty's returns, this fund is giving you 24-25% of return by choosing the 50 momentum stocks. So the answer is very obvious that you would go with the Nifty 500 basket of 50 momentum stocks, and a 40-year time horizon will iron out any volatility, if ever there is any, in that 40-year period, and will make some really handsome gains over that period. So my verdict is Nifty 500 Momentum 50.
Nifty 500 Momentum 50. All right, you have both choices and a very long time horizon, Rahul. So, I mean, no harm in doing both. Saurabh is writing in, age 33, says, I am looking to invest 4,500 rupees a month. Can you suggest some funds? Now, no additional detail there on for how much or what the goal is or what the expectations are. But, okay, let's say that this is someone starting out with an SIP, has this amount to spare per month at 4,500 rupees. What would you advise, Santosh?
I think considering we have very limited data, and this happens quite often, where people just want you to help them fix an SIP, I think they should begin with a balanced advantage fund. Today, traditionally, balanced advantages fund have a good mix of equity and fixed income. I think at 4,500, you shouldn't worry about too many schemes. You shouldn't worry too much about asset allocation. You take the 4,500, put it into a balanced advantage fund, and let it run for as long as possible. Should you do well financially and you have more lump sum money or SIP money, then you can spend some time to figure out an asset allocation and then choose between equity, flexi-cap, multi-cap, fixed income, whatever. But for now, keep life simple. Get this SIP run as long as you can. Choose a balanced advantage fund. Again, we are spoiled for choice, from funds that have just started recently to funds that have more than 10-year track record of performance history. Choose something that you're comfortable with and easy to start with, and go at it.
Okay. Aditya, let me come to you on answering that query.
Yeah, so I would actually agree, since we don't have much information, but if the investor does have a 5 to 7 year time horizon, then I would say, going back to either a Nifty 500 or a BSE 500 index fund or a multi-cap fund. Either of two would be great for me.
Okay, so keep it broad and keep it simple. Just even for a longer time horizon, Aditya, and we discussed this actually on yesterday's episode of the Mutual Fund Show, and an NSE 500 index fund, do you think is in that sense a safe bet if your play is on the Indian equity market?
I think so. Look, if you want a cross-section of the Indian market, I don't see how you can do much better than the BSE or NSE 500. I'm not one to say you should only go for active or only go for passive. I use both. I think people should use whatever they are comfortable with after doing their own research, of course. But if you're looking for an active fund, go for a multi-cap. That would be my go-to. If you're looking for an index or a passive fund, do the 500, the BSE or the NSE 500. I'm not a big fan of the Nifty 50 or the Sensex index funds, because that's just large cap, and it's not what I would want as a young investor for young investors. So I would want at least the 500, or let's say the large and mid cap 250, one of these two indexes, if I was going passive.
Okay. Pavan is writing in, age 29, says they're concerned about recession. Should I continue an SIP, which is about 30,000 rupees a month, or pause for 1 to 3 months to invest in lump sum? Now, Pavan, it would have been great to actually talk to you and understand why you're concerned about a recession. What exactly is the nature of that concern? But coming to that, the question he has is, should I pause my SIP and invest in a lump sum down the road? What would you say to this, Aditya?
So I would say, Pawan, there are lots of things to worry about in life. I don't think pausing a SIP should be one of them. Don't think about recession fears. That's all part of the investment process. Recessions will come and go. If you have a long time horizon, you should hope that recessions come and go so that the market does, fall and you can get in and then the markets rise again. So don't try and predict the recession because, nobody can really do it very accurately. And the stock market movement does not correlate with recession movements. So stock markets are indicators, which means the stock market will move before a recession actually hits. So if you're looking at recession data, you've probably already missed an opportunity in the stock market. So for an SIP investor, I would say don't worry about recession data, just keep plowing more money in. If the market does fall, as I said earlier, just put more if you can.
So let me tweak that question a little bit with the assumption that our viewer is not necessarily talking about an economic recession, but a downturn in the markets. Because that is a query that we get very often. Aditya, I'm sure it's something that you feel very often as well. People are constantly wondering that markets at record highs, new highs, new highs. When is the turn going to come? And at that time, should I pause my SIPs so I'm not buying in at record highs and wait for markets to cool off? If that was the query, what would you say?
So if I were a new SIP investor and the market fell, I would be very happy. And this is something that I try to get new SIP investors to think about, because you want to purchase your mutual fund units at lower prices rather than at higher prices. And if you're accumulating money in mutual funds right now, the lower price you get, the better it is for you. So no, please don't stop it, because if the market does fall, because you have an SIP, you're automatically getting, your mutual fund units essentially at a discount, and that's a good thing.
Okay, Santosh, what would you say? And I'm going to present the modified question to you as well, because that's what most people are concerned about when it comes to their SIP, right? The economy is at one end, but the question is that, are you catching the falling knife of a falling market, or are you potentially in danger of doing so?
I think you're right, Amana. When they mean recession, they mean the markets going down and the depreciation, the value of the investments that they have made. Now, it's natural if you're a new investor to think that there are two things that can happen. Number one, either you pause or stop your SIP. And number two, you come back at the bottom of the market hoping that you have actually beaten or taken the advantage of the market. Now, I wish this were true, and many of us would be living different lives if that was possible to predict a recession or predict a correction in the stock market and then come back again when it is done at a lower level, that is to sell high and then to buy low. We all know it's difficult, and Pawan, I hope you also get it that it's not possible to do so. Second, having a correction or a volatility or even a depreciation in the markets or correction in the market and your SIP continuing is the best thing that can happen to you, generate long-term value and wealth. Therefore, pause is completely out of the option. Please don't worry about the market going down or falling. Pause is not an option. You will realize that after a few months or maybe 1 or 2 years have passed by, that this correction or this volatile patch has been your best investment experience, because you're buying lower value, higher units and making more sense of your systematic monthly investments over a period of time. So I think it's maybe in your best interest not to pause or stop. Yes, if you have a lump sum and the markets have corrected, make the most of it by adding on to your SIP. I mean, if that is what you're asking, let the SIP continue. If the markets have fallen 3 months, 6 months down the line, add some extra money if you have, but not to pause, but to continue as long as you can.
Okay. Mahima is writing in, age 30, says she's invested in Quant ELSS Tax Saver, ICICI Pru Tech and Bandhan ELSS Tax Saver Fund for 3 years. Should I continue investing in the same funds or switch? Aditya, you want to take this very quickly?
So, okay, for the ELSS funds, well, there's no need to switch an ELSS fund. In any case, you have a 3-year lock-in, so you may not be able to get out based on when you put it in. But just because, time has moved on doesn't mean you need to pick another fund. As long as your fund is highly rated, and you can check this on various websites for the star rating of the fund, as long as you've got, let's say, a 4 or 5 star rated fund, you're usually good. So I wouldn't recommend changing that.
Okay. All right, we have run out of time on the show, but thank you so much, Santosh and Aditya, for joining in, taking our queries. Thank you, viewers, for tuning in and writing to us. Numbers on your screen in case you want to reach out to us. That's all the time we have on the Mutual Fund Show, but stay tuned. A lot more coming up on the other side on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching Last Trades, a show where we talk about bulk deals, block deals, and volume buzzers as far as markets are concerned. But before that, let's take a look at how markets are faring at this point in time. And it's been a fairly quiet day of trade, besides, of course, the choppiness earlier on in the session. And at the moment, while we are considerably off days highs, in fact, trading near days lows, the Nifty still managed to trade in the green at the moment. It is currently at around 25,400. And, in terms of the key contributors as far as the Nifty is concerned, again, we are watching out for, HDFC Bank, Reliance Industries and Bharti Airtel among those which are advancing. L&T, TCS and HCL Technologies, on the other hand, are stocks which are looking at declines coming through. About 120 points, advancing against the 90 points decline coming in. And To move on and talk about a handful of other factors, let's talk about the broader markets, because that's where we're seeing a case of clear underperformance coming in. We have about a 1.5% decline on the mid-cap index, and the small-cap index is down around 1.7% as well. Now, moving on, in terms of the broader markets, we do have plenty of traction in terms of gaining, as well as those stocks which are actually looking at a decline. It's actually, let's pull up the advanced decline ratio, because that'll actually give you an idea about how things are faring as far as the broader markets are concerned. And that ratio particularly looks stark. We have about 1 gainer for 4 losers in the broader market. So the broader markets are certainly taking it up the chin this morning, rather this afternoon as well. And it does seem like it's going to be a very subdued closing for the Nifty on this weekly options expiry session. Want to very quickly talk about the key movers, at least as far as the broader markets are concerned. And we certainly have that big cut in Vodafone Idea, but Indus Tower is also declining by around nearly 11%. So these two counters are the ones which are, well, facing the wrath of investors who are selling the stock in this. Besides that, we have something like an IFL Finance, which is also under pressure. Of course, there's a potential downgrade coming its way, which is why we are seeing a little bit of weakness in IFL Finance as well, down by around as much as nearly 9% and 8%, pardon me. And, besides that, in terms of key losers, a lot more, in terms of weakness. So something like an Chambal Fertilizers is down 7.5%. Prism Johnson's is down 13.5%, as is the case for several other counters. Pardon me, Prism Johnson's down around 6.5% as well. It's down 13 points. And in terms of gainers, we don't have too much to speak for in general overall. And we are keeping an eye on several of these other counters in terms of gainers, and we should have a handful of those on your screen there. At least as far as your gainers are concerned, we do have a little bit of recovery as far as the information technology pack is concerned. And of course, besides that, gainers few and far between, but something like Policy Bazaar is